Hello, I'd like to welcome you all who are joining us in this morning. My name is Angela Ximenes, and I'm the Executive Director of ABVCAP, the Brazilian Private Equity and Venture Capital Association. ABVCAP, as most of you know, has been active for more than 20 years in improving the conditions so that investments in private equity and venture capital can increase and develop over the years. Looking back over these past 20 years, we can see that the association has played a major role in doing just that. In the past decade alone, we have seen the growth of a robust ecosystem in Brazil with more sophisticated managers on the ground and more investors at both the local and international level. This ecosystem has helped develop more mature companies, and on the innovation front, we have seen a strong entry of local corporations, accelerators, incubators, and more GPs focused on early stage investing, which had been an Achilles heel in the past years. This has led to the long-awaited emergence of Brazilian unicorns, which now total 15 and makes the country the leader in Latin America. ABVCAP has been playing a major role in advocating for the private equity and venture capital industry in Brazil. We interact directly with government and regulatory agencies to ensure that the asset class is taken into account and that we continuously promote an investment environment that is more friendly to local and global investors and conductive of more businesses. We also have to stress the integration of the Brazilian capital markets with the private equity and venture capital industry. Portfolio companies account for almost 60% of the IPOs in the last 10 years, and they changed the profile of stock traded companies, increasing the attraction of thousands of new investors. As all countries come back to some state of normal, Brazil is making its way, and the need to rebuild the country post the COVID-19 crisis makes the role of private capital key in reconstructing the Brazilian economy. Long-term private capital will be the key player in leading investments that can modernize and have a positive impact on our society and environment. Many of you are active investors already and have followed how our industry has developed its ESG footprint and furthering the growth of impact investments. ABVCAP's 2030 Commit is leading a campaign with GP members and their portfolio companies to encourage them to hire young people in their first jobs, since unemployment among them was highly increased by the pandemic. We have no doubt that the change Brazil needs to protect its people and its nature is directly connected to the capacity and energy this asset class has to support companies that foster growth and innovation and complies with global values that will guarantee a healthier society and environment for future generations to come. I thank all of you for your participation in this event and look forward to today's discussion. I also would like to thank Apex Brazil for its ongoing support and partnership in co-promoting this event with us. Without further ado, I would like to call Robert Linton to initiate today's program. Thank you.
Thank you, Angela. Thank you for that excellent introduction to give us a little bit of an overview of ABVCAP's role in our industry and how fundamental it is here on the ground level. Welcome to you all to our mid-year version of the review of the Brazilian private equity market. We have in the past liked to host this at various events, either in Washington, D.C. during May for the MPE events, or possibly even over at the Super Return Emerging Markets, which are currently running over in Amsterdam. But This time we're going to be doing it on a virtual basis, doing it online. And of course, I'm going to miss you all on a personal basis to be able to talk shop and do things in a more personal line. But this is a good way for us to get as much information as we can to you in a concentrated format. So you get a bit of an update as to what we're seeing here in the mid-year of 2021. Clearly, a lot to cover, a lot of very in-depth deep dive data and opinions and market views coming up. We're going to have Cameron from Preqin is going to be giving us very shortly a market overview of the general fundraising investment flows that we're seeing in Brazil and in Latin America compared to the other emerging markets also the world. Then we're going to be having a keynote speech from the chief strategist at Vinci Partners, who's going to be talking about the macro picture for Brazil right now. Then we'll be diving into some cases and specific sector focuses, looking at the retail sector, healthcare sector, agribusiness, and also logistics from 4 of our top GPs on the ground here. We'll be talking about their experiences in these areas, as well as having a fireside chat with Andrew Zackerman of IDB Invest, who's going to be giving us his point of view from the LP side of the market. And we'll wrap up with some legal and regulatory updates from João Bozin from Tosini Freire. So very full calendar of events for us to go through today. And one that I'd like to reinforce the fact that the in-event platform that we're using to live stream this event, it also has various Q&A and chat functions where you can raise your hand and ask a difficult question, preferably a difficult question, one that's going to test us a little bit on the ground here and keep us on our toes. Please feel free to do that and to keep us in touch with your thoughts and what you're looking at, as well as the information and videos will be coming out to the platform afterwards. And we'll, of course, be very eager to see your opinions in terms of your feedback on the actual event itself and what you felt that was successful or not through our reviews. So again, please feel free to interact as much as possible. The more you're involved, the better the event becomes, and certainly the more interesting the questions that come downstream to the panelists are. So I think we'll try and get ourselves over to Cameron over at Preqin, who's going to be giving us, Cameron Joyce is going to be giving us an overview on the position of Brazil and Latin America in a global funding and financing format. I'm pulling him up a little bit early and see if we can catch him, and then I'll give him an extra minute. He's going to be racing through a very fast presentation over just 15 minutes. So he's on the clock. I'm going to give him a little bit extra time. But Cameron, over to you if you're ready to go.
Excellent. Thank you, Robert, for the introduction. And thanks once again for the opportunity to speak today. It's a pleasure to do so. So basically, my name is Cameron Joyce. I'm a member of the Research Insights team at Preqin in London. So we're a relatively new team. We've been put together by, we're essentially all made up of former industry professionals. We've worked across LPs and GPs ourselves. My own background is predominantly in emerging markets. I did work for a time for one of the large pension funds in Latin America. And before that, I did have a bit of experience managing a small Brazilian equity fund, which was good fun. And more recently at Preqin, I've had the chance to look back at Latin America again. I mean, this is a region that we're paying more and more attention to. We've been improving our data set quite substantially. And we actually released our first report on the region back in March this year. So if you haven't had the chance to look at that, then please do. But without further ado, I'm going to run through, as Robert said, some of the key data points that we have on the region. But firstly, I'm just going to run through a brief snapshot, really, of where we stand on a global basis with private capital as a whole. And I think, as everyone's familiar with, obviously there's been quite a sharp run-up in total AUM. In conjunction with our data science team, we have forecasts that run out to 2025, which we updated recently. So we're currently predicting that by 2025, we're going to achieve $18 trillion worth of private capital AUM around the world, which is an acceleration of the growth that we've seen more recently as well. And I think that possibly one of the more fundamental assumptions behind this is that long-term government bond yields in developed markets remain rooted to low levels, and that's something that's obviously it's obviously the case for the time being, but we have of course seen some inflationary concerns, but we're of the view that they are most likely to be transitory in nature, and we think that the bond market isn't pricing any serious concerns about inflation, and of course that's important for private capital as a whole, because I mean that underlines the fundraising, the ongoing fundraising and rotation into these asset classes from institutions around the world. It obviously impacts the financials of buyout funds, but I think more importantly, low interest rates also underpins the multiples that are being paid for these companies as well. So overall, quite high numbers, of course, but I think putting that into context, we also have something in the region of $17 trillion worth of negatively yielding debt around the world still. So that's perhaps putting things into a bit of context. So generally speaking, when we speak to our global investors, we have noticed that there is a clear preference for emerging markets in the longer term. So we can see this here, that this was a survey that we did ahead of our Preqin Future Alternatives 2025 campaign. And we saw that going out to 25, there's a marked increase in emerging markets. And I think that's certainly coming through, particularly in APAC, but clearly in Latin America, we haven't quite seen the traction that we may have liked. But clearly the fundamental demand for emerging markets is there. I think the key question that we're focused on trying to answer at Preqin is to what extent can these markets absorb that capital? And we acknowledge, of course, that there are some structural barriers to deploying capital in the region, but on the whole, it appears that those barriers are starting to ease. And when it comes to Brazil, of course, I think stripping away the headlines that we see, I think underlying developments more recently has been a number of quite positive developments on the macro front. I mean, I think we're paying close attention to the independence of the central bank, which of course has made a big impact already. And also in recent years, the pension fund reform, which has helped reduce the fiscal strain on the government finances as well. So we see those as two quite important fiscal measures that have come through, which should go some way to providing that kind of macro stability that long-term private capital investors, particularly international private capital investors, need before deploying capital in the region. So looking at the fundraising picture, so on the left-hand chart there, we have the global private equity fundraising, and it's a little bit distorted because of the effect of what we saw in China. So from 2013 to 2016, there was quite a sharp run-up in the number of funds closing in mainland China, which has skewed the number of funds closed by quite a considerable margin. But you can see that if you look at the amount of capital raised, that has continued to increase year on year up until 2019. And then, of course, we did see a drop in 2020, as you would expect on the back of the pandemic. And then looking at 2021, of course, we're very early into the year, so we wouldn't expect great numbers yet. But overall, despite appearances of the chart on the left, the fundraising picture globally is pretty robust, and that's especially true when you look at the numbers in North America. But of course, as you'll be familiar with, the fundraising for Americas, as we classify it, so looking at Latin America as a whole, which of course is pretty much dominated by Brazil, the numbers have been a little bit more muted. We haven't really seen a pickup either in the number of funds closed or the amount of capital raised. And of course, 2020 was difficult, as it was everywhere, but that's the picture as it stands. So looking at the AUM for the region, so quite a steady increase according to Preqin figures. Now, if you look at the total there, that's 53 billion in private equity AUM, which is actually more or less in line with how we see things in relation to the total equity market. So if we look at public and private markets globally, private equity makes up around 7.5% of the total AUM. And that's pretty much in line with what we see in Latin America as a whole. So we're pretty much in line with the way you would expect things to happen. But in terms of private equity AUM in relation to GDP, it's still very, very low at less than 1%. And I think that really just alludes to the fact that capital markets, equity markets as a whole in Latin America are relatively small in relation to the size of the economy. And we put that down to a number of things, including the fact that, that there's a large number of tightly held family companies that tend to dominate corporates in Latin America, which doesn't necessarily get reflected in the formal private equity markets and public equity markets as well. So overall, decent development. I think one of the things that we notice when we look at the figures is that buyout is the most popular strategy, which is very much consistent with what we see globally, but not consistent with what we see in emerging markets as a whole, because in APAC in particular, we find that actually the most popular strategy within PEVC is venture capital, followed by growth, and then buyout, which is in contrast to developed markets. And I think that really alludes to the fact that the ability to acquire control of companies in emerging markets can tend to be more difficult, and that's certainly the case in APAC, which is why growth strategies tend to fare better. But also the venture capital opportunity is much larger, which explains why those strategies tend to dominate more of the AUM in APAC in particular. But overall, Latin America is looking pretty good. 2015 and 2019 were particularly strong vintages for fundraising as a whole. So as part of our report that we put out, as I said, in March, we provided a survey for our fund manager clients, and we found that the picture here is quite interesting when you're looking across what particular asset classes are of interest across different countries in the region. The standout performer, of course, is hedge funds in Brazil, and I think that is primarily down to the macro issues that have been had in the market, and that's caused a lot of domestic capital to move into those strategies to help with capital preservation, and that's worked relatively well. The hedge fund strategies that we're tracking in Brazil have tended to perform quite well in quite a tough environment, and particularly a lot of those flows have been incentivized by low interest rates domestically, which has prompted people to move into those. But you can see it as well. I mean, across the board in Brazil, there's a lot of interest in Brazil in particular across all those asset classes. So private equity, venture capital, the second and third strongest asset class across the region in terms of fund manager preferences. So overall, looking pretty good. So just in summary then, so basically what we have noticed in Latin America is that outside of Brazil, there's a number of large pension funds in the region which have been increasing their allocations to private equity more recently. However, the majority of this up until now has been predominantly offshore. So if anything, probably the net inflows into Latin American private equity have in fact been negative, because we've seen probably more going out of the region than's coming in. But we think that there is scope for that to change. We do know that there's a number of large institutions in the region which are, as I said, looking at private equity for the first time. They're allocating to large GPs internationally, but we know as well that they're starting to speak to local players in Brazil. And we think it's probably only a matter of time until they become structural buyers of private equity in the region as well. So that's something to look out for. We don't see any solid signs of that happening yet, but I think they are natural buyers, and that's something that we'd expect to develop as we go forward. And I think possibly in the past, one of the things that's accelerated that trend is the fact that the political and economic challenges in the region have accelerated that flow of capital offshore. But as I said, I think that the scope for that to start changing, especially when we start to see hopefully more macro stability in Brazil in particular. So that's it from me. If you do have any more questions on the data that you've seen in this presentation, please let me know. Please do reach out. We'll be happy to send more information through. As I said, if you haven't already done so, please take a look at our report that we put out in March. There's plenty more information there. It is a free report to access for those of you who aren't Insights Plus subscribers. And if you have any other comments or questions, then please do get in touch.
Cameron, I've got a quick one for you while you have the slides up in front of you. Step back a little bit to the investor preference slide. I think it's like the third one in your by region. Here we go. Give us a little bit more flavor in terms of, for example, the actual LP base that you're tapping into that is providing these preferences. Is it reflective of where, you know, total capital as a whole? When you're doing a reference chart like this, it's obviously a little bit of mix of what goes in, goes out in terms of the target sum. But would you say that this is fairly reflective of global investor geographies already? So you're going to have the majority being from the US, a good chunk from Europe and from Asia, and not so much coming from the actual emerging markets themselves, or is that, which I would imagine, or do you find that for these type of surveys you get a slightly different mapping of the global institutional investor universe? So give us a little bit of more background context on this particular investor preference slide.
Yeah, it's a good question. I think, I mean, basically what we do send out periodic surveys to our investor clients on quite a regular basis. And that's basically all our investing clients across the globe. And typically Preqin's investor client base is, I would say, you know, traditionally we've done better in developed markets. I mean, we are picking up more clients in emerging markets as well. But I think it would be safe to say that many of these respondents are from North America and Europe. Mm-hmm. I think from memory, I'd have to check, but I think there was around 400 respondents from institutional investors to this survey that was done.
Right.
As I said, that this is ahead of our Preqin 2025 report that we put out last year.
Okay.
So quite a broad overview. Yeah.
But probably when you're asking the question to them, you also go into details saying a little bit why they consider something to be more opportunity or not. And usually more to do with like high price levels. From your other research commentaries, have you been seeing that basically in particular, the US market is being considered as a high price level and providing less opportunity because of the high multiples being seen there and the entry costs? Or is it more to do with some other structural issues?
I think, yeah, that's certainly true. I think, yeah, multiples continue to climb higher in the US. I mean, I think it's probably a little bit early to say that investors are, they are looking to diversify, that's for sure. But I think, you know, whether multiples can continue to push higher is open for debate. I mean, multiples are high, but they could go higher. Mm-hmm. I mean, if you look at, you know, public equity valuations, for example, we're running at around a, you know, more than a 5% earnings yield right now. And as long as US 10-year rates stay where they are at around 1.5%, I mean, it is feasible that multiples climb higher in public and therefore private equity markets as well. Okay. But clearly, I think what this reflects is that longer term investors are starting to look further afield. But as I said, I mean, I think that, you know, the constraint is the extent to which investors can deploy that capital. That's really the main, the main thing that we're focused on.
Great. Cameron, thank you so much for that. It's a very short period of time. You put a lot of information in front of us. Look forward to going into these slides in more detail later on. Let's jump over now to, thank you again, Cameron, for your time. Let's jump over now to Jose Carlos Carvalho, from the chief strategist from Vinci Partners, is going to be doing a deep dive into the Brazilian macro outlook and perspectives that we're seeing on the ground, not just today, 2021, and in impacts from COVID from the past year, but also looking forward as to what he feels, could this be possibly a virtuous cycle ahead? So, Jose Carlos, over to you and your slides.
Thank you, Robert. Thank you for the opportunity, the invitation to be here talking to you guys today. I think, you know, it's a very good time to talk about Brazil right now. I think we are on the verge, as I said, of a virtual cycle. And Brazil, you know, dealing with macroeconomics, it's never boring. So we always have news going on here in Brazil, but I think that particularly now we're in a good spot, of a good perspective of what's to come. I'm going to deal here with the main subject here in Brazil, then we can go to Q&A if you have any more specific question. But I think the number one here in our agenda is the payback of these past economic reforms that we have done in Brazil, and people kind of forget it, because we get a little bit in the short-term news, but we forget it. But we have done many important things, mainly in the government, in Temer government, where we did I think, which is the most important reform, which is the public spending ceiling. So now there's a limit on how much the government can spend. No matter how the tax revenues come, if they go up or down, there's a cap on how much the government can spend. And there was a break for that due to the pandemic last year, but we are back to it. And right now the government, Bolsonaro, approved something very important, that automatic stabilizers. Once you reach the cap, the ceiling of the government expenditure, there are now rules that have to be followed automatically. Like, for example, civil servants' wages are frozen. That's one of the most important measures, but there are other measures too that are also important. The labor reform also done in Temer's government, I think that was very important to flexibilize the labor market in Brazil. And also the end of subsidized loans through BNDES, which was a source of very inefficient investments here in Brazil, because you're just subsidizing politically motivated groups, people very not necessarily the best projects, but those had better political connections. So that's gone. And now, last year, we had the approval of Social Security reform in Bolsonaro's government, which was very, very important. We're talking about very significant, about 800 billion reais in 10 years savings. Just recently, we had the approval of the independence of central bank. And today, actually, yesterday night, there was the final vote for the privatization of Eletrobras, which is the big state-owned electricity company in Brazil. So these are all very good structural reforms. There are more of them. I could spend time here speaking a lot of them, but these are good things that are coming into Brazil, and they're gonna pay back these efforts. We're gonna pay back in terms of more growth in the future. Inflation is a little bit of an issue in Brazil right now, but when you look at inflation, actually about 80% of it is commodity related, as in many countries. A central bank is hiking rates. They just came out with the minutes right now, just before this meeting, and they signaled that they're going to go to neutral rate. And neutral rate in Brazil is thought to be 3% real rate plus 3.5% inflation. So we're talking about 6.5% nominal rate. Just bear in mind that this year Brazil is going to grow 5.5% real. Plus an inflation that might end the year at 6%. So the nominal GDP in Brazil probably is going to be around 12%. So 6.5% is not that much in terms of rates, in terms of what's going on in Brazil right now. Growth, we're going to talk about that. Growth in Brazil also is helping the fiscal side. We're going to have now the savings I mentioned from the Social Security reform, and despite the hiking in debt last year due to COVID, now we are already seeing a reduction in debt to GDP. COVID crisis seems to be well in a good path. We're improving. I'm going to show some numbers, and I think there's some tailwinds for growth in Brazil. So these are the basic topics we try to follow here in Brazil. And I started with this chart here just to show you how timely, is this presentation, because this is the market consensus for GDP growth in Brazil. And you can see the blue line is the GDP forecast, from Focus, which is all the market participants, and it's compiled by the central bank. And you see that as early as 2021, the growth for 2021 was on the downside because of the pandemic. People were afraid that, the impact would be very big. It hit as low as 3%, and suddenly it has already shot up to 5%. And here at Vinci, we think that it might be a little bit above. It might be around 5.6% in 2021. The market is reducing the growth for 2022, but we think they're trying to be conservative there. Our number for 2022 is between 3.5% and 4% of GDP. And one interesting way to look at this is to look at the daily electricity consumption here in Brazil. And this is from January to December to see the seasonal pattern. And you have here in the gray lines here, we have the 2010, 2018 range. The red line is the consumption of electricity in 2020. The orange line is 2019, and this is what we are having now in 2021. So you can see that, as we were hit by the second wave of coronavirus crisis, as we ended it, the shift in electricity consumption was significant up, and now we are going down due to seasonal patterns, but way above any other year in the past. And this data here, it's released with 2 to 3 days of lag. So that's very timely, that's very on the spot, and we see that there's significant growth in Brazil. And you can see that the regular pattern for this time of the year would be a further reduction in electricity consumption. We are seeing it flat, which is something very, very strong. Actually, it's so strong that people moved from Brazil will not grow to Brazil will run out of electricity by the end of the year because we are consuming too much electricity. Brazil is growing too fast. We have consulted a few specialists in that area. PSR is the biggest one. We've talked to them, and even in their worst case scenarios, they don't see a rationing of electricity in Brazil in 2021. The main reason is first, prices are going up right now of electricity. That's why inflation is a little bit on the upside, one of the reasons. And the second reason is that in 2000 and 2001, when we had a rationing, 85% of the electricity supply in Brazil was hydro. Now just 65% is hydro. So there's a lot of more wind and solar, and the thermal also, they're also using it here in Brazil. So that's not as much dependent on water as it was before. And there's a drought here going on in Brazil. So that's much better, perspectives for this year. This cycle in Brazil, we have the perspective of it being stronger and longer, and the main reason is because of this data here that we have on the chart on the left. Investment in proportion of GDP had fallen significantly by the end of Dilma's government, went all the way down to 14%, stayed down for a while, and in this latest number that came out for the first quarter, it shot up to 19.5% of GDP. So there's a difference when the pattern of the cycle is the main component is consumption, because when the main component was consumption, it's going to come to an end very soon, because you either hit it by inflation or by the current account deficit. But when there is investment, you can see a supply catching up with the demand, and therefore you can have a longer cycle. Well, you can look at this chart here and see, well, but in the early 2010, 2012, investment was also high. But here, there was a lot of state-owned enterprise and state-induced by the subsidized credits of BNDES that we mentioned before, investments that were not profitable at all. For example, there was a petrochemical unit here in Rio de Janeiro from Petrobras that they spent almost 1% of GDP on that, and they didn't get one liter of anything out of it. It's shut down and it never operated, so didn't do anything. Another example is, for example, shipbuilding in the Northeast was heavily subsidized. Once the subsidies came to an end, everything shut down. The difference now is that we're seeing private sector doing investment. A lot of the investment opportunities, privatizations, concessions, airports, roads here in Brazil. We just had a water and sewage auction here in Rio de Janeiro, which was very successful. The internal rate of return for the winning bids, were very, very low, very competitive. They had also in Alagoas, and many other states are doing it too for water and sewage. And actually, when we look to at the chart to the right, This show, the red line is the same line as before, investment in proportion of GDP, but we look here in year-over-year terms, and the blue line is the sales of trucks, because, you can see in the chart, this is a more than 10-year chart, there's a very big correlation between sales of trucks and investment in Brazil, because if you're going to reform or build an airport, a road, you have to buy trucks. That's the common denominator of all these operations. So you can see that, we have investment data only until March, but we have almost daily data that we compile here at Vinci, a proprietary series of truck sales. And we can see that it's going to accelerate further in the second quarter. So that's why we're optimistic about growth in Brazil. I think the cycle is going to be longer. And also the reason why I think this perspective here of lower growth in 2022 is also wrong. The market will eventually revise it up. One important thing, here to have more growth in Brazil is to deal with the COVID crisis. I think things are going in the right way. I'm going to start here with the chart in the middle, the total vaccinations. We are now having an average about 1.3 million shots per day. So we already had more than 90 million shots. So that's growing exponentially here, and we have supply coming. No problems here in the supply of shots in Brazil. Just to have an idea, the universe to be vaccinated in Brazil, we're talking about 170 million people, which is people older than 18 years old. So we are within a good pace. And the effectiveness of the vaccine, you can look here at the chart on the right, the numbers are a little bit small, but we can see this is hospital admissions by COVID, You can see the gray line, is people older than 90 years old, 90. So this group has already been fully vaccinated, 100%. So you see there's no increase at all in hospital admissions of this group, which is among the most vulnerable. The black line is people between 81 and 90 years old. And you see also no increase here in hospital admissions. So this group is fully vaccinated, so it's working fine, no problem there. This red line here is people from the 71 to 80 years old, also fully vaccinated, this group, also no increase in vaccination in hospital admissions here. The green line is people from 61 to 70 years old, also fully vaccinated, also a sharp drop in hospital admissions. Which are the groups that we saw some increase in hospital admissions recently? The lower than 40, the blue line, 51 to 60, which has just been vaccinated, and 41 to 50, which is being vaccinated right now. So you see that vaccination actually worked in Brazil, and any increase we saw here is within younger people. And we know that, this thing here, hospital admissions, is a lead indicator for deaths. And we see that there's a pattern of drop here in daily deaths. We saw as the economy reopened after the second wave, we saw a stagnation here in these numbers here. But as we saw here, a decreased number in hospital admissions, we expect that within 15 days, which is usually the lag between hospital admissions and deaths, we see a further drop down the road. So we think here that, we are getting out of the woods here in terms of this COVID crisis. So that's a positive shock for Brazil. People, we're gonna be back, to work as time goes on towards the end of the year. Actually, we did a calculation for that. This chart here shows the number of people who had already had 2 shots, and just for a reference, AstraZeneca, Oxford AstraZeneca, and Pfizer in Brazil, the shots have a 3-month lag difference between them. So it takes a while to have the second shot, but our estimate that the priority group, which 36% of the population, will have 2 shots after July. And, the total population older than 18, which is 75.8% of the population, which is 170 million people I mentioned before, they're going to be vaccinated close to October. So that's not a 0-1 situation, but that's a situation where things go improving as you get by the end of the year. And we think that's going to be a very positive shock. It's a growth tailwind to Brazil, people coming back to work fully. This is one of the tailwinds we see for Brazil. The second tailwind we see for Brazil growth right now is on the chart on the right. There is a very big commodity shock hitting Brazil. This chart here shows on the left the commodity index CRB in dollar terms year over year. So you can see here over time how it performed. And the blue line is the monthly GDP in Brazil, but looking in annual terms year over year. So that's IBCBR. It's the monthly GDP calculated by the central bank. You can see that over time, there's a very big correlation between growth in Brazil and commodity shocks, and we can see now that we have been hit by a positive commodity shock, very significant, one of the largest we have seen in the last, 2 decades, and GDP growth is actually responding to that. So of course, there's going to be a major peak here because of comparison base to last year. But as I mentioned before, we expect these things to slow down a little bit, but still close the year with a 5.6% GDP growth for 2021. Monetary policy, that's also interesting because I mentioned to you guys in the beginning that central bank is hiking rates, But here, this chart on the left shows you on the gray line, the 2050 NTN-B interest rate. So that's the real rate for the long term here in Brazil that we saw it was not very significantly hit, recently, but we think gonna go down because of better fiscal terms. We're gonna talk a little bit down the road. But also when we look at the 1-year rate, which is the more related to the central bank actions, we see it a hiking this real rate, that's right. But that's in historical terms, that's still very, very low. Brazil used to live with, double-digit high real rates, and until recently, you have rates as high as 8%, and this hike here, we are estimating it to be still, as the central bank is talking about, to stay around the 3% neutral rate, which is we are almost there. So we don't see a significant impact there. And also the lag for this impact is about 9 months to 1 year. So right now we're still being hit, by what happened 1 year ago. This is just talking about rates, but financial conditions are much wider than just rates. So here we use the Goldman Sachs Financial Condition Index, and it complies not only interest rates, but the shape of the curve, the long-term rates, the exchange rate, the stock market, the spread that corporates are paying over treasury. So that's a more widespread sense of financial conditions. And you can see here that these are still very stimulative, as we know, stock market's going up, exchange rate still very stimulative. And we see that the GDP growth here is in the gray line, went all the way up to hit and meet the correlation here with the financial condition index. So monetary policy is still supportive in Brazil, despite the hiking rates in the short end of the curve, which, as we saw here, is not hitting the long end of the curve. The long end of the curve is very well behaved, and we think it's going to be better because of the fiscal situation. Well, I just mentioned this point about the fiscal scenario, and I think this is key. As I told you in the beginning, there is a difference here in Brazil right now with anything we saw in the past. In the past, we didn't have the government cap, expenditure cap, so anytime we had an increase in revenue, Congress or the executive branch would find something to do or somewhere else to spend the money. And now we have a cap on how much government can spend, no matter what is the tax revenue. So the amount of money the government can spend is last year cap, plus inflation. That's it, And if you go over it, there's automatic stabilizers right now. So what happened when this growth in GDP that we're seeing here surprised the market? It came stronger than expected. What happens is that tax revenue also starts to come up stronger than expected. So there's a very big surprise in tax revenues here in Brazil, mostly due to growth. And that was a key reason to explain the chart on the right here that shows Brazilian debt to GDP. Debt to GDP, because of the COVID crisis, there was an extraordinary expense last year of almost 10% of GDP. That explains this increase here in debt, you know. But, you know, people were saying that, no, that GDP in Brazil is going to go to 100%, and then interest rates going to go through the roof, and after rates go through the roof, that GDP going to explode and going to be a big trouble there. And actually, we're seeing the opposite. No, it hit 9%. It never hit 100%. And actually, the latest actual number, it fell from 90% to 86%. You know, and this is Vinci's forecast for the end of the year. We are estimating that we're going to end the year at 81% of GDP. So that's very positive for Brazil, because we start to see now flows in fixed income into Brazil, because the long end of the curve, as I just showed you, is moving around 4% real rate, or in nominal terms, it's trading around 8 to 9% nominal terms for a 2028, 2029 paper. If that is going up in a spiral way, you know, it's going to explode, you know, 8% is very low rate because you don't want it. But if that's falling, you know, 8%, you know, it's a lot of money. So there's no more 8% in Brazil right now. And inflation, actually this year, it might be, as I told you, 6.4%, you know, but for the following years, it's very well anchored, you know, it's around 3.5%. So that's a lot of rates. So we start to see inflows for fixed income in Brazil and for stock market too. But that's very, very positive, because that shows not only fiscal stability in Brazil, which is good per se, you know. I have a feeling, if you have to explain the low growth in Brazil for many, many years, you know, the main reason is not that we didn't do enough fiscal. I think it's that we did too much fiscal. We can see here from the Lula years and the Dilma years how the debt to GDP grew significantly, and yet all this phase here ended with a very big recession, not with a very big growth. So I think the right thing Brazil has to do is to respect the expenditure cap. You know, that's going to be very positive. And as the government respects expenditure cap, that GDP is going to fall. The share of the government expenditure in terms of GDP is going to fall, because GDP is going to grow with inflation and real growth. And government expenditure is going to grow only with inflation. So the real growth will abate, you know, will reduce the share of the government. And that's going to be very positive for Brazil in the long term, because it's going to be able to have lower taxes, you know, you're going to be able to leave more money with the private sector. And in fact, I think that's, you know, I can't, you know, emphasize enough, you know, how important I think that's going to be to growth in the long term. So I think if we move to a higher growth in Brazil, you know, from the 2.5% that we used to see in the past here to a higher number, and I think we are going to do that. You know, if there is one reason why we can move to that higher rates, you know, I think it's going to be the shrinkage of the government size in the economy. So that, I think that's very, very, very important. I mentioned that, you know, in Brazil, when things go wrong, they go wrong, and when they go right, they go right. So we start to see more growth. More growth means better fiscal situation. A better fiscal situation leads to more inflows in Brazil. And we think that, you know, we are very constructive here in Brazil regarding the exchange rate. This chart on the left is very interesting. It shows the gray line is the price of Brazilian commodities that Brazil exports. You can see that, you know, it has a correlation with the real, which is the blue line, and it's in the right. But pay attention that, you know, the commodity prices is an inverted scale. So usually, for example, when commodity prices go up, and here the gray line going down means that commodity price went from 150 to 250, a very big increase in Brazilian exports. Usually, you know, the real would appreciate, and this time the real depreciated. The main reason we think is because the rates were very low here in Brazil, but this is starting to catch up right now. So flows are more positive in Brazil. Number one, because there's more exports here. You know, number two, higher rates mean better fixed income inflows into Brazil. And when you look at the current account in general, you can see here in Brazil, current account used to be minus 4% of GDP. has already improved to -0.5% of GDP. And that has a very big correlation with the real exchange, the real exchange rate, which is the gray line. And we think that this thing is moving to about a 1% surplus. So the flows of dollars to Brazil they have improved, and they're gonna improve even further. This is just to show you, look at the chart at the right here first, the flows to Brazil can be summarized in these gray bars here. There's the commercial flows, the blue lines, the financial flows, the orange line, but the sum of them is the total FX flows into Brazil, which is the bars. You can see that the real moving from 4 all the way to 550, almost close to 60, was a consequence of these outflows here in Brazil from 2019, 2020, very consistent outflows. And you can see that now the flows are much more balanced. They're up and slightly down. This month, they're up again. So the thing that made the real devalue so much, it's in the past. Now it's a more balanced market. And we think that as current account improves even further, and with higher interest rates and better fiscal situation, money starts to flow into Brazil again. We think that this thing will become consistently positive in 2021, and the real might start to appreciate. Just to give you a feeling of what's going on. Now, this is the trade balance here in Brazil. The blue line is exports in Brazil. This everything seasonally adjusted and annualized. The gray line is imports, and this is the trade balance situation. So you see a very, very significant increase in Brazilian exports. Brazilian exports, this chart comes all the way from the 2000, early 2000s, and you see that's record levels of exports here in Brazil. Imports are growing, but not as fast, and the trade balance in Brazil shot up above $100 billion for 2021. So that's a very significant number for the flows in Brazil. We're going to have, presidential elections in 2022. That might be one issue. The big debate here in Brazil right now is about, if going to be a polarized election or going to be a third way candidate, and there's no answer so far, but one thing important to realize actually is that Bolsonaro, there is no political connection at all. I'm not a supporter or anything, but Bolsonaro numbers are not as bad, as you might get impression reading the international press. This this orange line is actually the bad numbers. People say that the president was bad, and this comes all the way from Fernando Henrique Cardoso, Lula terms, Dilma terms, Temer, and Bolsonaro. You see that the bad numbers for Dilma and Temer were pretty high. And Bolsonaro, right now, even after the COVID crisis and unemployment very high, he still has very, very low numbers in terms of negative. So many people talk about impeaching Bolsonaro. If there is something that is stopping the Congress to the opposition to try to impeach him, is that he still has a very good support, and is great and good. People who claim that Bolsonaro is great and good are still very high. So that's the key issue in the presidential election. Actually, Bolsonaro has a very good support for about 30% of people. This number of people who say he's good and great is between 30 and 40%. 30% of the people is from the right, going to support Bolsonaro. 30% from the people is from the left, they're going to support Lula. And there's a center electorate, up to be grabbed. So the tendency here in Brazil that both sides, Bolsonaro and Lula, as they come close to election, they're going to try to conquer the center vote, because they have the left and Bolsonaro has the right. They have to conquer the center. So we expect, in theory, that the debate, the ideas running into a presidential election are going to be moderate, not extreme ideas. And one thing is that, if we are right about our forecast of growth of 5.6% in 2021 and 3.5% in 2022, probably the economy is going to be better. Election is always, it's the economy stupid. Probably we're going to see an improvement in Bolsonaro's situation going forward. So the news here is the Bolsonaro numbers are not bad. And if growth is going to go up, probably it's going to get better. So it's not going to be such a radical election in my view, but that's still a lot of things going on there. And just to close here, some ideas, I would just like to bring you guys, to all these points that I mentioned before about the reforms that we have been doing here in Brazil, very positive things, privatizations, social security reform, labor reform, government expenditure cap, and these are things that are going to pay off, and we also sometimes we get a little bit lost, in the small details, and we miss the big picture. And here in Brazil, actually, I like to see this chart. The chart is the blue line is the Bovespa in dollars, and have here the situations we saw in the past. For example, here in 1992, Collor was impeached. It seemed to going to be the end of the world, and that was a very good investment opportunity. The re-election, for example, of Fernando Henrique Cardoso in 1998 was not a good investment opportunity. Actually, the market went down. And then Lula was elected, and people say, "Oh, Lula is coming. It's going to be really, really bad." And no, he was market friendly, and was a very good investment opportunity back then. Just remember, the chart is in logarithm terms, so that's a very sharp high. And then you feel very comfortable because Lula was doing very well, and then The Economist comes with the cover of, Brazil takes off. Finally, Brazil is doing so fine, in 2009. And then the next 10 years were really bad for the Bovespa. Then people came out, Dilma was impeached. Going to be a lot of political turmoil. The market starts to go up. Bolsonaro gets elected. Market's going to crash. No, just went further up. And now the same, The Economist, that times Brazil very well on the negative side, on the opposite side, just came up with a cover for me to complete this chart here, with the Christ the Redeemer here on oxygen support. So Brazil is doomed, sort of that's the tone here. And that actually, given everything I said to you guys here, the solid background of reforms and the tailwinds we see in Brazil growth right now, I think definitely that's not the case. Brazil is not doomed. Brazil is not in oxygen support. I think we might be on the verge of a virtual cycle here, as I said to you, because it's growth kicking into better fiscal performance leading to a better exchange rate here in Brazil. Exchange rate, if the real starts to appreciate, the central bank will not need to hike rates as much as they're saying right now. So it's all sort of a virtual cycle that kicks in, and I think that might be very positive. And I think that might be the trigger of the economies. This is a summary of what I just said. We are about on time. So if Robert, I don't know if there is any question or.
No, Zaid, to be honest, it's so much information and going through so quickly and so well presented. Really very, very, very good analysis and summary. And go ahead and leave that last slide up just so people can absorb that as well while we're talking. Really some fascinating points, even if it's just looking at something as simple as providing the economist as a contrary indicator of what we're going to do is interesting. But a couple of points I picked up on I thought were fascinating. And you mentioned some of them proprietary and some of them just clear thinking. When you're looking at the picture, the macroeconomic picture, which is such a complex one in Brazil for all the socioeconomic and political elements that go into it, when you think in terms of warning signs, what you might consider as leading indicators, what would you recommend to the LPs listening in on this as to what might be some of the trigger points that they should be watching for both on the upside? You mentioned debt GDP ratio is something that's reflecting some of the positive externalities as well, but also on the downside, should we be looking more as inflation as being a trigger that will increase interest rates faster than we'd like to see, which might impact differently the balance sheet? Or maybe as they do in the United States, unemployment seems to be one of the more leading indicators until it's not. At this point in time for Brazil, what would you consider to be, from Vinci's perspective, the leading indicators that you like to look at beyond, for example, I think truck sales is a fascinating leading indicator as well, as is the price of electricity and what we're going to be seeing in terms of electricity demand. Those are both very salient points. But besides those two, are there any other leading indicators that you like to look at that could give us a hint as to maybe anticipate some of the velocity of change that we've seen in the forecasting anyway for the past 2 months? Has been a tremendous change. But anyway, from your point of view, what would you say is what you'd like to keep tabs on and what you also keep an alert for?
Okay, maybe next time we talk, we can bring our proprietary lead indicator. We actually did a lead indicator using all these variables to try to forecast Brazil growth, and they're all pointing up, So, but would be a good thing, to have this next time. But
well, I'll book you for that for sure.
But I think there are a couple of points there. Of course, inflation, it would be something to be on the watch for the negative side. But I'm not very concerned for one reason. Number one is 80% of inflation that happened in Brazil was due to commodities. Not only commodities, but when you translate commodity price that went up in dollar with a real that devalued, actually that amplified the movement. So, and real is starting to come back right now, and some commodities are starting to come back right now. And the central bank hiked rates to avoid, spreading over the economy. So I think that's well taken care of. And when you look at the market, the short end of the curve went up, but the long end is stable. So that's telling me that things are under control. And this focus forecast, that market does, for inflation for the coming years, they have it around 3.5% for next year, 2 years down the road, 3 years down the road. So I think inflation is really, the central bank did a very good job, hiking rates early, and that's well contained. I don't think that's going to derail growth. Actually, as I told you, nominal growth in Brazil, it's way above, nominal rates right now. 5.5% real growth plus 6% inflation. We're talking about 12% nominal GDP here in Brazil. That's very, very high. Unemployment, I don't think it's the relevant number right now because, the series is broken. IBGE, which does the calculation, they moved the system from personal interviews in the street, in the houses, to a telephone interview. And that here in Brazil, there is this government support, this Bolsa Família, that they're giving grants to people, and someone calls you from some government branch, saying, "Are you unemployed?" People are afraid that they're going to lose their grant. They say, "Yes, I'm unemployed." So actually, there is a big bias there. It doesn't match the correlation. If unemployment is the number it is, Brazil is seeing the miracle of productivity because, production is increasing a lot and employment is not growing. But right. We have something equivalent of the non-farm payroll in the West, which is called CAGED. And that's formal. That's the actual numbers of the companies. When the company hires someone, they have to register it somewhere, just like the non-farm payroll register in the BLS. And there you're seeing a significant growth in jobs, and therefore we think that.
But those are registered employment and wouldn't be from the gray economy, which has a very large percentage inside Brazil. So we still wouldn't be able to track that part.
Yes, but usually it's harder to make a formal employment. It's easier to make an informal employment. So if there's growth in the formal market, probably in the informal market it's much larger. But people don't want to declare it because they're afraid to lose this government grants. So and we are a little bit blind about this informal sector. But I don't think given retail sales, for example, supermarket sales, I don't think there is a major crisis going on in Brazil because they're all going through the roof, very significantly. So yeah, that
came across quite well in your slides that you were showing. Some of the catch up seems to be at a pace that's considerably stronger than even the catch up after the GFC back in 2008 and 2009. Zay, we've run out of time, and I don't have a question from the audience right now, but there's an awful lot of great material here, which I know our LPs in the audience are going to be enjoying, degustando this information and going into deep thought on this and getting some feedback. Again, Jose Carlos Carvalho will be available for questions and answers and direct contact straight afterwards if you want to follow up with this. Otherwise, we're now going to be going into a break. Thank you so much, Jose Carlos, for your tremendous presentation here. It really was a very, very interesting deep dive into what we should be looking at and what is really going on in between the lines here in Brazil right now. So we're going to go into a short break right now. We'll be back at 11:10, so just another 5 minutes. We have already eaten up some of that break. Just to go get your coffee, readjust your balances, and we'll be back after the break to start going into some of the cases that we want to be talking about. In particular, we're going to be going into the retail and the healthcare sector. So we'll see you back in 5 minutes, okay? Okay, welcome everyone back to the LP Mid-Year Forum inBrazil Connect, presented to you from ABVCAP and Apex Brazil as part of the Convenio inBrazil program. Welcome back. We're now going to do some deep diving into sectors and also cases within those sectors by some of our leading managers here on the ground. We have a half-hour session, and we're lucky enough to have two of the leading managers in middle market private equity space, Crescera Capital and Vinci Capital Partners, who will both be presenting on their topic sectors with cases to go with. So 15 minutes each, and we're going to be giving open room also for Q&A from the audience. So again, any questions coming through on the InEvent platform, please send them through to us, and I'll forward them on to Priscilla and Gabriel in good stead. So we're going to start off this time with Gabriel, who's going to be giving us a presentation on retail commerce, and also in, I believe, the Vero case. It's going to be on the list here. So Gabriel, you are all set and ready to go here?
Thank you, Robert, and thank you for the opportunity. Thank you, ABVCAP. Well, it's always a pleasure to talk about Vero. It's one of our leading cases in our third fund. Just before jumping into Vero, just to give you guys an update on where we are as a firm. Vinci, which is now a listed company, we IPO'd Vinci, the asset management firm, in NASDAQ earlier this year. So we ended the first quarter of this year with 55 billion reais under management. And out of that, a little bit north of 11 billion reais in private equity in our two strategies, our core VCP growth strategy and our new impact fund, which we closed earlier this year as well. So we are quite optimistic with the outlook of the investment space in Brazil going forward. And I think Vero here is a good example. Vero is a buy and build strategy in the telecom space. It was born out of the merger of 8 independent ISPs, internet service providers in the countryside of Brazil. These are all fiber to the home providers that we merged at inception. And after that, we acquired other 4 companies, and we have already multiplied revenues in Vero by 4 in 2 years. Okay, sorry, in completing 3 years in 2021. The transaction was very complex at the onset, as you can imagine. It was the merger of 8 companies with different shareholders, but we still managed to do it at a very attractive price, and in a very interesting payment scheme where we deferred payments of the cash out portion for 5 years. So this helps us hedge FX exposure and also leverages returns. The thesis here was about the digitalization of the economy. It's quite obvious today, but this was a pre-pandemic investment, obviously. We closed this deal in January 2019, but it's a thesis that we had been working since 2017. And basically, as you can see, if the slide moves here, the demand for data has been growing exponentially and is poised to keep growing, and the pandemic was just a boost to that. And Brazil is very underpenetrated in fixed broadband connections. It lags not only first world countries, but also lags our South American neighbors such as Argentina and Chile. So we saw a huge opportunity for the increased penetration of this product, and the sector was highly fragmented. Okay, while the incumbents, the very large telcos, dominated the big cities and capitals of Brazil, the countryside was in Brazil has been taken by thousands and thousands of independent, small, family-owned ISPs, and in such a capital-intensive business where scale matters so much for returns, we thought it made a lot of sense to promote the consolidation of this sector, and we started this movement, a movement that has been I mean, a thesis that has been taken by other sponsors as well. Today, there are at least 4 or 5 PE sponsors exploring a similar thesis in Brazil. Vero's strategy is to combine extremely...
Gabriel, I think your slides are not coming through to us. Are you sharing a screen?
Oh, I'm sorry. You were. I'm sorry about that.
No, we're fascinated by your discussions, but I know you're probably accompanying a couple of slides. Pop them up there for us.
Yeah, here. I'm sorry about that. Are you seeing now? Okay.
Yes, we are. Good to go.
So this was just a slide I was talking about the thesis where we had our growth profile, but both in terms of revenues, EBITDA, and clients. Okay, so a very high profile growth that we have been experiencing at Vero four times so far. And this was the overall market demand that I was describing, a huge increase in total data transfer in the country in general, but yet is still a very low penetration when compared to other countries. Okay. About Vero strategy. Okay, so we are a 100% fiber network, growing both organically and through M&A. We give a very good service, so it's not that we are serving smaller and less competitive cities. Despite that, we still offer top-notch services. So the average speed that Vero sells today is 260 megas. So it's equivalent to the speed that Singapore has on its network. So it's a very, very high speed network. We are leaders in the cities that we cover. Today, it's around 130 cities. Our revenue is 100% data subscription plans, so it's a very predictable revenue stream. As I said, we focus on smaller cities to avoid competition with incumbents. And behind that is a great management team, which has been executing tremendously well. And here, just a brief timeline of what we have achieved at Vero so far. We invested in January. In April, we launched the brand. As you may recall, these were 8 independent companies with 8 different brands. So we launched the Vero brand. We rolled it out. Since inception, we also rolled out the ERP system. We implemented the SAP as our system there to have robust governance and controls. In the first year, the company was already audited by a Big Four, which was a huge win given the informalities in the sector. We started launching a new product portfolio. We started launching new cities to boost organic growth and new areas in existing cities. We then, in 2020, acquired 2 other companies, and we moved from being an operation solely in the state of Minas Gerais to adding also the south of Brazil, the 3 states in the south of Brazil. So today we have a much broader footprint. And earlier this year, we did 2 additional deals, and we closed the first quarter with more than 400,000 subscribers. So this makes Vero the 7th largest broadband provider in Brazil, even accounting with the incumbents. So we went from 0 to number 7 in these very busy 24 months. The road ahead is looking great. I mean, we still see a lot of growth opportunities, a lot of consolidation opportunities, and also organic. And it's a sector where I think, I mean, it's a great example of the value that PE adds in an economy such as Brazil. These were all family-owned, informal businesses that we are growing under a professionalized management with good capital allocation, with the right systems, the right incentives, and the company is just booming. We are not only increasing revenues, but margins and customer satisfaction. I mean, everything is going in the right direction. And I think it's a great example of the type of consolidation, the type of productivity gains that scale capital can bring to the markets. This is why we chose this deal in this panel. And I'm obviously, like Robert said, I'm open for any questions on this.
Gabriel, I haven't had one from the audience as of just yet. Maybe they'll be sending one through in a second. But just in terms of, you know, what we're looking at here in terms of the sector, in terms of the overall dynamic of what Vero is living in and growing into, would you say that, I mean, obviously, you know, providing broadband services is not exactly, this is not new tech or something that's coming out there. This is a very applicable strategy for Brazil in the sense of you're not looking to really pave a new road for a new technology coming in. This is really just a question of pushing out something and doing it in a better way than perhaps it's been done before. What would you say Vero's most interesting moat might be around your castle for your strategy in the sense of you've got these points here? What would be, I mean, these are all things that you could say are fairly generic, but is there one thing here that is really going to stay out? Okay, this is what Vero does better than anyone else going forward.
I think that management and all our strategy is really centered around the value proposition of being the best internet service there is. Okay, so and that's much more than just a connection. Okay, it's how you market, how you sell, how you install internet at your customer's home, how you support and how you give maintenance and etc. So our customer experience is really what drives our growth. This is why we have much smaller churn rates than the market. Our churn rate is 1.3%. The market average is 3%. So it's less than half the churn rate of the market. So I think this is the greatest moat. It's the company is completely geared toward, it's completely customer centric, completely geared towards customer satisfaction, which in our view, it's not how the big incumbents are wired. And in addition to that, today we are selling high-speed internet, but we have a bunch of products in-house where we can keep deepening this relationship with our customers. So in the road ahead, there may be new revenue streams at Vero that will be built on this relationship with our customer base.
Okay, perfect. Well, fantastic. That's a very good, quick, deep dive into obviously a dynamic sector, an area that is going to be of interest going forward for Brazil. As part of a coin flip exercise, Priscilla and Gabriel, also I put together two snap questions, and so you have one quick minute to answer the snap question, which has been passed on to you. Basically, in your own past experience, and also with Vinci, after dozens, if not hundreds, of LP meetings that you've had over the years, and particularly in the post-COVID environment, is there any theme or diligence area that you feel that investors, like the ones who are online right now, are perhaps over-exaggerate in their risk-reward analysis, that they perhaps put too much emphasis on this and that maybe should let things run at a different volume or at a different velocity for Brazil?
That's an interesting question.
It's a tough one. I know it's a tough one.
I think that maybe, I don't know, maybe consolidation in M&A plays such as Vero. We have had a lot of LPs afraid of the integration risks and etc. These are obviously risks that need to be managed, they are quantifiable, right? And they are actionable. So it's much more a matter of execution than something that you're exposed to, like commodity prices or the FX or things, or inflation. So it's much more actionable. So we prefer to take on risks where we can act on, and we prefer to pile on these risks and execute better than obviously expose ourselves to risks that we don't control. So
from the onset of the deal, Exactly.
So I would say, and in various cases, this was the case. We had a core LP of ours, which in the beginning was afraid of the amount of work that would be required to unite 8 companies from the beginning, and we knew that. So from the beginning, we had our management team at Vero was fully hired before closing. Okay, so we had the people there, we had the integration mapped, and we knew exactly what we needed to be done. And obviously, we had bumps on the roads. Some of the things that we planned didn't go as well as we thought, but this is execution, right?
But that's well summarized. So effectively, sometimes an LPs will anticipate problems that perhaps by working through the problem at the ground level, you can get through it. Yep. Gabriel, great. Thank you for that. And again, difficult question, very well answered. So let's move on to our next segment. We're going to be talking with Priscilla Rodriguez from Crescera Capital. It's going to be talking about healthcare and in particular about the hospital care case. But I think, Priscilla, you are fairly well versed in terms of having to deal with multiple inputs to deal at a pre-deal stage, having gone through this in the hospital sector in a huge way. So tell us a little bit about the hospital care case and also about your dealings in the healthcare segment.
Good morning, Robert. Good morning, everyone. Thank you for the time. I prepared a few slides, and I don't want to spend too much time on the wording of those slides, but just explaining some of the things that we've done. Let me see if I can share my screen here. Just 1 second. Here, I think did it go through? Everybody sees
it? Yes, it did. You're good to go. Just pop it up to full screen. Perfect. Away you go.
Perfect. Okay, great. So good morning, everyone. Just a very brief on Crescera, and I think a lot of you know, but we are a Brazilian private equity and VC manager. We currently manage 5.3 billion reais. We are raising our 5th fund. We've been investing for the last 10 years, mainly in the education, on the consumer goods, specialty retail, technology, services, and healthcare sectors. We've been building a number of different consolidation plays. And the way we operate, which I think differentiates us a little bit in the market, is that we would like to establish Crescera as a partner of choice to entrepreneurs, to managers, to good businesses, and help their companies and the original business that they created to grow into different businesses, much larger, and start consolidating the sector. Our most recent fund, which we're in the market raising, targets $500 million in terms of target size. And this is mainly because the investments we do are very much focused on the middle market. And in the middle market, I think similar to some of the challenges that Gabriel has outlined, we have a number of different opportunities to help companies transition from family-owned business to professional businesses. And this is how we are approaching some of the investments across a number of different sectors, but as well as the healthcare sector. Talking a little bit about healthcare, and I have 2 slides here to just present how we look at the sector, how we see the sector outlooking, is that we see a continued demand growth within healthcare in Brazil. And this is driven by a number of different factors, but very quickly from the fact that the middle class has been emerging in terms of size in Brazil. The fact that everything that is related to healthcare services has grown at a much faster pace than GDP growth. There is a continuing increase from the consumption side, from Brazilians to look for better healthcare services. The public sector strikes on offering some of that service. The population is increasing, so we currently have 214 million Brazilians. They're looking and will look for healthcare services, and the population is aging. So I think, on a nutshell, I think similar to a number of different countries in the world, we will see a continued demand growth within healthcare, which is one of the reasons why we think private equity capital can make a difference to fulfill some of that increase in demand. Otherwise, to the flip side, in the Brazilian market, what we are seeing is that supply is not following the same pace. In certain situations and certain areas, it's even more challenged because there has been a decline in terms of supply. When you think about the public sector, there has been a decline in terms of offering of beds to Brazilians. When you look at number of overall beds, which includes private and public offering altogether, we have seen a decline in terms of a number of beds per inhabitants in the country. We also see that compared to other developing economies and most important compared to developed economies, Brazil is behind in terms of life expectancy. It's behind in terms of infant mortality. There are a number of different challenges that come up from an increase in terms of chronic diseases in Brazil. And this creates some opportunities for investors to put together projects that will fulfill some of that demand and can fulfill some of that lack in supply significantly. And this is what we are doing. And this is with that in mind, how we've been approaching healthcare. This is a very simple example on some of the things that we are looking in terms of healthcare at Crescera. And I'm going to spend more time talking about hospital care in a minute. But we've done, with all that outlining in mind, we've done 4 different plays in healthcare as of now in terms of private equity investments. We've done an investment in the education sector for medical school consolidation. There is a significant gap between number of doctors, nurses, and assistants compared to the potential growth in the sector that will come from the increased demand that I just mentioned. So in 2014, we started a consolidation of services that can, with technology, offer a much broader courses to students so we can have the workforce for healthcare later. Then in 2017, we started a consolidation of hostels and healthcare services in a few cities. I'm going to spend some time talking about it, which is a company that we branded as Hospital Care that didn't exist before, was a thesis that we created. Then in 2018, we started a little bit more specialized investment within blood transfusion centers. I'm sorry, there is a typo there, but in blood transfusion centers in a company called Vita, where we partner with some other doctors that have done investments in oncology business to create one of the leading providers of blood transfusions in Brazil. And most recently, we're doing a separate investment within home care, which is an area that we believe will grow significantly in terms of demand as costs within healthcare have been growing more and more and more. And I would like to spend some time today presenting to you what we've done with hospital care. In addition to the outlook that I mentioned on the healthcare sector in a few slides before, the other characteristic that we realized in terms of service provider is that on the hospital space, the sector was extremely fragmented. It's still extremely fragmented. There are very few hospitals that are part of some type of network. The vast majority of hospitals in Brazil are doctor-owned, small. They have on average 65 to 70 hospital beds, which makes the operation of that facility extremely challenged given lack of scale. Almost all those hospitals are generalist hospitals, so they need to offer a number of different specializations and a number of different services. And with this limited capacity, what happened was that several of them started becoming a little bit more specialized in one specific specialization or another, but lacked access to capital to invest in technology, to bring new equipment, to modernize their surgery rooms and ICU facilities and so forth. And they also become very weak in terms of negotiations with payers. On the private hospital space, who pays the bills are usually the healthcare insurance. And those insurance, they've gone through a number of consolidations over the last couple of years. As a reference, we used to have 2,000 healthcare plans in Brazil 10 years ago. We're now at around 750, so there was some consolidation in the sector, but on the service offering, it was extremely fragmented. Several of those doctors have created very strong medical protocols with high quality outcome for patient treatment, but weak access to financing, controls and processes and so forth. So we decided to create a different type of consolidation. There were some consolidations going on in the market, and all of those consolidations, they were taken into consideration a standardized process in terms of medical protocols. And we wanted to build an asset that could partner with local doctors in order to offer better quality service to their patients, but also provide them with everything that they needed in order to become one of the leading facilities. So we create this thesis, which is outlined quite well in this slide, which basically creates for every single city where we operate. We select an anchor hospital or an anchor facility that has a very good reputation in terms of branding for quality medical outcome. And from that facility, we expand the offering of service in order to be a one-stop shop, to say, in terms of healthcare services provided to patients. So we add image business, we add primary care facilities with consultations, we add specialized services, we can add long-term monitoring of chronic diseases, and we become this one solution only where we can strengthen the relationship with payers in order to be the partner of choice for their operations within that city. In order to do so, we had to create a holding company that could benefit or could implement several management capabilities, which was lacking in some of those assets. So we brought a very strong management team day one when we bought the first hospital in the city of Campinas, very similar to what Gabriel mentioned that they've done in terms of management team. We created a shared service center where we had offered a number of different opportunities there. We created a budget culture. We've created a number of different strategic rationale for consolidation. We acquired a number of different assets within those cities, within those hubs. And we've created a company that now looks like this, which is a fast-growing healthcare platform in Brazil. We've started in the city of Campinas in 2017. We brought it up to 6 different cities. So we're now in 4 cities in the state of São Paulo. We have 2 cities in the south, one in Florianópolis and one in Curitiba. We currently own 11 hostels, 27 outpatient units. We also have some lives in terms of beneficiaries for healthcare plan, both in Campinas and in the city of São José do Rio Preto. And we created an asset that for this year has budgets of over R$1 billion of revenues, extremely high growth potential. And we did this by partnering up with doctors in all those cities. So in every single city, we have a partnership with the doctors, with the founders. They help us manage the operations from the clinical perspective. They work alongside our management team to implement a number of different opportunities. And we're now focused on not only organic growth, not only M&A acquisitions and growth by continued consolidation, but a number of different initiatives on organic growth. And hostile care is it's now considered, I think, a very pleased for us, but it's now considered one of the leading consolidators within healthcare service provider in Brazil, with a different view in which doctors are part of the process and have been benefiting from the growth alongside with us in the fund.
Great stuff, Priscilla. That's a great overview of very interesting and intriguing investment inside one of the hottest sectors in Brazil. Direct questions on this particular case come straight through to Priscilla. We'll hop into your final coin flip question, which is basically, let's go through into the sectors. This obviously healthcare is a tremendously robust and interesting sector, but name a couple of sectors besides this one, just besides healthcare, that you believe will provide strong returns and quality deal flow going forward in light of COVID as well, and also one that you feel that perhaps is going to underperform. So 2 + 1, 1 minute, fast.
So in our view, is everything that is called essential services will benefit. And that goes on a number of different sectors that target the Brazilian consumers. So education is a sector that will benefit, because I think Brazilians should look and should keep
any particular subdivision of education that you'd like to focus on a bit more?
We see education in terms of technology, what we call the T-square approach, which is technology and thematic. So everything that is a theme within education that can be benefited from additional technology within education will be and will perform better than other players. The other sector that we like a lot is the food and beverage sector, as Brazilians are looking for more healthier products and are now every time more worried about their health lifestyle. So in consumer and in specialty retail, everything that is related to that should benefit better than others.
Okay.
On the flip side, I think everything that is more discretionary will suffer. Because with COVID, people are becoming more and more conscious towards expanding and discretionary services and products might be a little bit more challenging.
So high cost, high input type services will suffer. Great. Thank you so much, Priscilla. Thank you so much, Gabriela. We're out of time. We need to move on quickly to our next panel. Thank you both again for really very insightful, very good deep dive into 2 challenging sectors. So I'd like to jump in now with Anders Ackerman from IDB Invest. He's going to be giving us some insights from the money chair, from the LP side of things on how Brazil looks today from the investor's point of view. And certainly, Anders, tell us a little bit about your program today, how it's developed, how it's gone on. IDB is not a spring chicken in this market. You've been here for quite a while. So tell us a little bit about your history in the background, a little bit of what you're doing today, and then we'll start picking around through some of the gems of wisdom that you might have from an active LP perspective on the ground here in Brazil right now.
Thank you very much, Robert. Good morning, good afternoon, everybody. Okay, as IDB Invest is actually the private sector arm of the IDB group. We're composed of IDB, the public bank, IDB Lab, which is our institution more focused on it's a lab really focused on venture capital. And we are IDB Invest, really most of all a growth investor. IDB Invest has 47 shareholders, which are governments, and we are present in 26 countries in Latin America and the Caribbean. We have personnel in every single country. We feel it's very important for our mission to be really close to our environments where we make our investments. Our assets under management are about 16 billion as of today. We follow 3 broad segments. Infrastructure, which is the most traditional for our development mission, if you will, and where there's tremendous needs in Brazil and the rest of our region. Corporates, which basically will focus on TMT, agribusiness, telecom, and industry, and financial intermediaries, which are really a way for us to get to other sectors, banks, non-banks, and investment funds. We try to, on the investment fund side, we try to focus on growth and the mid-market, and also in priority sectors for IDB Invest. Which are these? The ones I mentioned, perhaps mostly is multi-sector, agribusiness, transportation, technology is very high there, healthcare, education, what you would see as the traditional sectors that PE funds or PC funds would invest. I should mention we're also investors in private credit. We do think that we always invest in private sector terms. We look at the same profitability and risk as anybody else, but we do feel that we are supportive of certain segments within the PC and PE industries where they have very positive developmental effects. So that's us. Our program is fairly small. However, it's not new. We have been investing for the last 30 years, making a lot of mistakes during that time with a lot of lessons learned. And but as of today, last year we invested in 9 funds. We closed 9 funds, a good mix of private equity, private credit, and late venture capital. So we're really focused. We're sector agnostic. So most of the funds where we invest are multi-sectors. We have a good mix of country funds and regional funds. As everybody in this call may imagine, we're also concentrated in the largest countries in the region. That's Brazil, Mexico, Colombia to a lesser extent. Brazil is the largest in our portfolio, probably 25% of our funds portfolio. But we have a very significant interest in diversifying to other countries, to smaller countries. But obviously we have to accompany the development of the industry. That's in a nutshell our program.
Okay, well that's an excellent summary. You see Brazil, IDB sees Brazil and LATAM with a long-term lens. You use a long-term profile, long-term lens as an institutional investor. Now, it's an easy thing to say. Everyone talks about this, but tell us about some of the actual applications, some of the actual realities that come with being able to look through a long-term lens in terms of not ignoring market timing, but using it to your advantage, and how you've learned from your past experiences. And you mentioned some of the past errors to actually see how market timing can work to your favor.
Okay, that's a great question. We have found, and this is through our history, that when we started investing in this region, and this is a region prone to crises, as everybody knows. When we started investing, we probably went into private equity funds, actually, which are really early. Nobody else was doing it in a significant scale. And you had all these types of new fund managers, and you had all these managers landing in a region with no experience. So we made a lot of mistakes, and we had to write off a lot of resources. Plus, we had quite a few crises through time, and so money was lost. Definitely, we made some money, but we lost a lot of money also in the last few years, in quite a few years. What we found was that as an investor new in this also, whenever conditions looked great in the environment, we started investing. And obviously when things got, a new crisis came, we stopped. We really stopped. So we did this quite a few times, actually. So we were investing, if you may, on the worst time possible, and exiting at the worst time possible also. So we missed a lot of the good funds, good teams, great stories. We missed those for sure for quite some time, to be honest.
It's independent of manager selection, independent of any other elements that go into your whole portfolio selection, right?
That's correct. So we were trying to do market timing, but market timing is really, really difficult, both on the political side, on the country growth side, and on the FX side. So So when you, if you don't have the nerve to go through the cycle, you will probably get wrong the market timing, and that's what happened to us. So now what we do, we try to be in the market most of the time. Again, we don't have a large program. We do on the fund side, we do a few funds a year, but we try to be there most of the time doing fund investments. And that way, we'll probably get some losers. We'll probably, but we will find good deals when the market is right doing that. So it did take us a big learning curve to get there, but this is what we do. This is a big lesson for us to always be present in the market. This region is really prone to political crises. Now we have COVID and social disturbances. So perhaps our mission is a little bit different. We are here to support those times, to be honest. But again, as I said before, we do make investment in terms of market as any other investor. So we don't want to lose money either. So
yeah, well, but you have some differences that are quite noticeable, and you see this with some of the larger ticket institutional investors that have started to set up shop here, such as CPPIB or GIC or whatever, the local presence. And that's so necessary to get that information flow coming back and to really structure a solid long-term investment program. Tell us about your interaction at the local level.
Okay.
Not obviously here in Brazil is what we want to be focusing on, but also for LATAM, you have these in your other offices too.
Sure. Local presence is extremely important for us. Local presence or local intelligence or local networks, as you may call them, those different aspects. The way we're structured is we have a rep office in every single country, and our representative in those countries represents all IDB sector windows, meaning public sector, us, and IDB lab. So it makes for a lot of synergies because we're very well connected to what's going on the political and government side, plus also on the business side through that rep office, and especially through our representative. Also, a big issue for us, or a big issue for all investors, is integrity issues. And if you're not connected in the market, you may not know, or you may not understand fully who you're doing business with. So this is a way to surpass that, because obviously we're owned by governments, and we have to be very mindful of that. So we do it that way. We see other investors that do not have that obviously not everybody has that network, but I think the most successful ones build their intelligence or their networks even remotely.
Would you say that has a more of an impact even when you come to the more qualitative analysis necessary to evaluate a primary investment in a team and in a fund product, as opposed to necessarily just an asset coming downstream and investing directly in a company? If you're having to look at a fund manager that has a significant amount of qualitative data in the analysis that you're looking at, having the local office helps you to absorb that almost through an osmosis process over a period of time?
That's completely right. I would go further than that and say the funds business, it's a small business. So we all know each other. So you get to know a lot of the teams. What you don't get to know is when you start looking at new teams and others in the environment. And usually our local intelligence allows us not to make mistakes more than to select the right team, not select the wrong one, for instance.
Okay. The risk reward profile. Yeah.
Right. And that's very effective for that.
Okay. When you mentioned, I want to go a little bit into the idea of the local market monitoring that you're doing with your office here in Brazil, and obviously with your, in the past, certainly loads of visits, and not quite as many recently because of COVID, but that will obviously return. The advantages of having that presence on the ground. If we don't look at just the pure manager analysis and looking at track record and risk reward and all that other stuff, and sector and investment strategy and style drift and all that stuff, if we're just looking at the local market monitoring of the regulatory side and the ecosystem itself, what do you see as, from a regional perspective, being kind of like no-nos, things that you don't want to be seeing happening at the local level? And have you seen any of these over the past years in Brazil, or have some of these been drifting away a little bit, like the necessity of having an LP on the investment committee, which is now firmly in the back rear view mirror? We're not having that anymore. What are the kind of the no-nos that you see, that you pick up on from local market monitoring when it comes to regulatory and legislation?
Okay, that's a great question. One of the big, I would say, deterrents for international investors is investing in local vehicles. If you do that, many are trying to get to a place where they're similar to a limited partnership, which is very traditional, and we all know how to do that, and we have our protections. But very few countries have achieved that on a local level, to be quite honest. And it still surprises me, we do this, but it still surprises me what we find over time. And I think there's great improvements. In Brazil, the Economic Freedom Act, I think, will help things a lot on the local vehicle side, to be honest, with the liabilities. There's still improvements, but there's a lot that's being built with market practice. What I mean by that, this is specific for Brazil. When we invest in a fund locally, or that fund has a local vehicle, we have to construct such a structure in that vehicle that mimics what we like in terms of governance. Obviously, you're going to miss some things, but at least you have to have the basic rights of removal or whatever those may be. That's not still, Brazil is probably more advanced, but in other countries, that's not embedded. So,
again, on a regional basis, you've got other countries that are in worse shape than our platform here, certainly.
Right. And if you're investing alongside local investors in other countries, I don't mean Brazil, you get a lot of resistance even from them. Things that are rights that would benefit investors are really complicated. So that's a big work in progress. I think it is a chicken and egg thing. More international investors will push more this towards a good structure, but international investors are very wary of investing in such structures. So it's a chicken and egg thing. We try to do what we can from our side.
Right, and that's part of your presence in the local level as well, is to interact with us here at ABVCAP, but also with regulatory bodies to try and put forward best practices, as you say.
Sure.
As a whole, of course, you've invested, as you said, in 9 managers. You've been active, so you're clearly happy with the risk reward and also with the current setup. It's just a question of trying to keep it going forward and improve what is already a good ecosystem on the ground. When we're talking about your actual portfolio and going forward, clearly our managers are very interested in keeping you interested in the loop. You've got your local presence to help out. In terms of information and data, what do you like to see from the managers that they can get to you that perhaps is maybe not being quite as easily divulged as before? Is it just a question of looking at comparative returns, or is it looking at more of some of the ESG reporting? What's on your radar these days to try and turn up a notch a little bit to get more feedback from Brazil?
Sure. It goes from the basic, I should say, and there has been a big improvement. I think managers in Brazil have been battle hardened, and the ones that have survived several crises in the last decade have improved significantly. So, but if I'm talking regionally, it goes from the basics. Having a good quarterly report that tells you about returns, that's for monitoring. It is not easy to get, as you may imagine. Before making an investment, track record information. It is, when you try to blur that with a lack of track record, you try to put pieces and bits in a presentation, and you waste an hour trying to explain that. That's a very bad signal. If you have it or not, it is very evident to an investor, and it should be really put in numbers that can be seen easily. I think.
No, I've got to cut you off there. I mean, dollar-based returns. Clearly, you have the ability to put money to work in reais. You have some local capital. Yes. Do you see that as being a tendency going forward to try and reduce some of the volatility and noise that comes from the FX side and the need to perhaps see dynamic hedging, which might be more popular going forward with lower interest rates? But do you see evidence of this from your own portfolio, not just across the region, but particularly in Brazil, where it's worth the effort to try and be stepping up some actual capital in reais to invest alongside local managers and to level out that kind of volatility risk?
That's right. We see this for just a few countries where you can do it. We have a treasury in Brazil, so we're able to do on a limited basis, but we are able to do local currency transactions, and we invest in local currency. That surpasses that issue of the FX, which our biggest losses have come from FX in funds. So that's a big issue, and that's a solution. Not everybody can do it, but I think Brazil should have the scale for somebody for some institutions to think about this. I think Brazil is probably a special case here, and this is one of the countries where we're doing this.
From scale size, just because we have the scale to be able to do things well.
That's right. Okay. You're not going to be able to do this for a smaller country. Plus, you don't have the markets, the appropriate markets. But at least Brazil is a very good example of where it can be done for us.
Yeah. Your portfolio of managers, how did they react coming through the COVID crisis? Was it a little bit of a stop and go, a recuperation of breath after being underwater for a few minutes, or did you feel that there were some strong cases and good solid responses from your local manager? Do you feel that they reacted well? How did they react, and how did they?
We have a couple of teams that reacted really, really well and got ahead of the issues, the curve, took the valuation hits that had to be taken really early, and really reactivated whatever needed to be reactivated very fast. They went into repair mode. They concentrated in the companies, and they did well. There were a few also that were in denial. I have to say just a few, which it was business as usual, no hits to valuations, and so they were in denial, and I think they fared worse over time that the ones that were really active, and most of the managers we had were somewhere in the middle of those two. I think overall it was a very positive, and it was less detrimental that we thought at the beginning, except for a few areas. You can imagine we have funds in the Caribbean where tourism is really affected, so those funds are really suffering. But overall it was very positive, and fund managers have really shown the evolution they went through, and that they were really good on the local level, many of them.
Would you say that, are there any particular sectors that also provided particular joy for your portfolio of funds, that the ones that within, ignoring the managers, across managers, certain particular sectors, one or two that really popped out?
Sure. Well, as it was mentioned before, healthcare and education were really positive for us, and it was really great for us because those are sectors we're really interested in per se because of the developmental issues, and I think it was a great. I mean, the outlook for those sectors, obviously, it was a horrible time, but obviously those sectors fare well overall in our funds. Technology also, we have seen the acceleration of financial inclusion in a year what would have happened in several years, probably.
Yeah, that's been outstanding, yeah.
Yeah, in Brazil also, especially, I guess, in Brazil. So those, and we were investing in those, and those did really well.
Right, good follow through in each of those segments.
Yeah.
Final question, and we're already running out of time. In terms of tactics, in terms of looking into adjusting a little bit, you have a positive viewpoint on the region, you have a positive viewpoint on Brazil, you're engaged at the local level, you've invested in multiple fund managers, you're looking across different different forms of investing in Brazil, both at the local level in reais and in dollars. But in terms of some additional tactics that you would like to develop or see going forward for IDB, and that you think that might have extra traction inside Brazil right now, is there any other elements that you feel you'll probably increase in your portfolio, whether it's doing perhaps some more secondaries to try and mitigate J-curve, or maybe doing a little bit more possible co-investments or directs, or maybe reverting back into different segments of your primary investments? Anything in particular that you see coming up on the radar that maybe our GPs can knock on your door with a hot PPM and be ready for a warm following?
Sure. No, there's several themes actually coming up. One that we like a lot, and we recently did an investment in Brazil, is the impact theme. And we're not talking about the old NGO impact, really social fund where investors lost money and they were there for other reasons.
And we're doing happy to do so. Yeah.
And we're happy to do so. We're talking about more mainstream PE groups that really are tigers making money, if you want to call them that, where they see the opportunity impact.
And they're using impact measures, using impact reporting guidelines. Anything else? Any other particular things?
Well,
come on.
Climate change is going to be a big story. We keep on saying that going forward, and for the next several years, is probably going to be the biggest story on energy side. So that's something that we're very interested in looking at more. We're looking at it directly and through bonds, but we're interested of looking at it more through the fund side also.
Fantastic. And as we've run out of time, thank you so much for helping us out here with your insider's look to what the LPs are looking at. And I do wish you well with your portfolio and your activity. It certainly has been a tremendous support to the ecosystem here in Brazil, as have a number of the LPs that are good friends of yours that are listening in today, that we have a good camaraderie here for the investment circle here. So Anders, thank you very much for your time.
Thank you, Robert.
We're now going to go to another break very quickly because we've already eaten into the break a little bit. We'll be back at 12:15, so it's in another 7.5 minutes, and we'll be back to talk about sectors again of interest for GPs talking about their own cases in these particular sectors. So see you in 7 minutes. Hello again, welcome back. Okay, we're going back live after our just short break here. We're going to have two case studies and sector overviews coming in from Alberto Camões of Stratus Group and Sebastian Popic of Aqua. We're going to kick off with Alberto, who won the coin toss and gets to go first and talk us through the logistics sector specifically, and also BBM and its role in there. And give us a little bit of an overview of what Stratus is up to today as well, Alberto, before you get started. And you've got 13 minutes, so let's race through some interesting info on logistics and BBM.
Thank you very much, Robert. Thank you, everybody at ABVCAP. Hi, Sebastian, nice to see you. If you can start my presentation, I will be very succinct, speaking a little bit about Stratus initially, and then about the case you mentioned to give a context. Well, next slide, please. The first slide. Stratus, we are a middle market growth-oriented private equity firm. We have been for more than 18 years working together, 6 partners that have endured the test of time. It is a unique approach, and we call it robust to middle market because we have control positions and we combine the growth that comes from organic growth with add-ons. We're very close to the companies. We're very much hands-on. We think the segment has low competition. There are not too many funds that do this. And we select companies in sectors and platforms with high growth potential. We also do a digital transformation initiative in all our companies. This is a robust and sustainable investment strategy because when you combine organic growth with add-on acquisitions, even more if you put some value added from the digital, you always grow. Our experience in 4 recessions we have lived in our life so far, corporate life so far, is that we have grown in each and every one of them. Just 2 examples in 2014 and 16, and the last one, the coronavirus, that is kind of going, we're fading out. And we have won since we started several prizes on ESG initiatives. Next slide, please. Our investment focus could be divided into 2 factors of funds that are virtuous among themselves. First, we look for fragmented sectors, scalable sectors. That's how we can grow organically, because when there are a lot of companies, of course, you can grow much faster. And you have possibility to do add-on acquisitions. We select the platforms, as we call, that could be an initial point for a consolidation. And of course, we couldn't do anything without a very good management team that is aligned with us and committed to business plan with long-term incentives. As I mentioned, we have these 2 to 3 avenues: organic growth, acquisitions, and digital transformation to increase the margins as well as the multiple of the companies as we go. And regarding monitoring, we are very much hands-on. We implement good governance practices and ESG from the start. And as we are in the board and selecting managers, we improve operations. Next slide. Just a last slide about our investor. Next slide, please. We have one thing which is, I would say, a strong point for us is that we have a diversified set of local, Brazilian, and international investors. I would like to point out that we start and we still have multilaterals. We don't speak too much about our investors, but here I think they're mentioning the IDB. I don't know if Andres is still on board, but I mean, IDB has been one of our first investors and has introduced us in ESG practice. We also have local investors like funds of funds. We're in our 3rd fund. So we have funds of funds as well in Brazil, pension funds. We always have had pension funds since our 1st fund, and we have grown this. So having Brazilian and foreign investors has been one of our strengths. Not to mention foundations, university endowments in the US, family offices here and abroad. Next slide, please. The case we're speaking today is about BBM and its investment thesis. It's a logistic company, BBM. And as we can see, this is a demonstration of our strategy that combines in this huge market, both organic growth, acquisitions, and application of technology. Market is 200 billion reais, almost extremely fragmented, prone to consolidation. We had a unique position of going end-to-end. That seems perhaps a little bit ambitious, but there are lots of synergies and space to grow there. We have made this what we call Plataforma, digital BBM's digital platform, which is a solution for you to have an idea. It's not simply a system or something like that. We have partnered up with TOTUS. When I say partner up, we have a common code that we're doing together, as well as some optimization software that we're doing that on our own because that's our secret sauce. It's 1 million hours of programming, so for you to have an idea. It is not a small endeavor. The company has been growing very rapidly in the last years, from 2017 to 2020, 57% CAGR. I will show some figures on the next slide. So it's a track record of a very high growth, sustainable in all ways, and also profitable. And there is still a lot to be captured as we go. This is a public fact. We are looking to do an IPO of that company. Next slide, please. A little bit more on BBM. It's a leading and high growth player in Brazil. You can see that we have more than 90 branches in Brazil and Latam. That includes Chile, Peru, Bolivia, Paraguay, Uruguay. We also have bought some companies that do e-commerce. So last year we had 1 million deliveries for consumers and 3 million deliveries for companies in the B2B side. As you can see in the right-hand side, when we started, we invested in September 2017. So a company that was almost 300 million reais in revenues that has grown over the years. And it's more or less half organic and half through acquisition. The first year, 2018, we acquired this Transact, which is a subsidiary of the German logistic company called Kühne Nagel. We bought 2018 Translovato, which is the less than truckload, the parcel, the big parcels. And then 2020, we bought Dialogo, which is an e-commerce company, and Lag Express, which is a company in the Central West for going to that region. In the first quarter of this year, we continue growing 32% without any acquisitions. So and there is more to come. Next slide, please. I think this is the last slide, and we just wanted to mention that when we speak about sustainability, I'm not going to pass through all the details in this slide, but we do there, as we do in all companies, we hired a third-party consultant, Resultante in this case, that they made first a baseline of where we were in ESG and helped us in all the initiatives, in all the fronts. And we are finalizing 2 years doing that, and of course, we are improving our ESG ratings so that they do or other people do. And that comes from all fronts, from environmental to social and to governance. Just to go in that last one, we have this company which is publicly listed, but not technically listed, but not traded. Again, we're about to go for an IPO. That's a public thing. And we have in environmental, you can imagine how much space there is to be done there in a company that has logistics and that uses fuel, and then consumption is a very important thing. So, Robert, thank you very much for this opportunity.
Alberto, very interesting.
The last slide. And of course, I'm happy to answer any questions.
Very interesting. Go a little bit into detail on the sector that BBM is in terms of logistics. Clearly, it's a huge, broad stroke of an idea or thesis and sector. When you talk about logistics, it can be anything from digital all the way through to like physical, the fact that God knows how only 12% of our roads are actually paved. So the challenges for logistics across the board are here, there, and everywhere. Tell us a little bit about where BBM is specifically looking to seek to add value inside logistics, and also if you see other pipeline investments in that kind of logistics that you think going forward are going to provide opportunities for Stratos.
Starting with the last question, I would say that when we do a certain sector, we try to concentrate everything there. So I don't see we going a separate investment, at least now. Perhaps after we divest, we could do it again, because this is certainly a very successful investment. And regarding the logistics, the company had a very platform of dedicated business, which was kind of asset intensive with very long-term clients and very long-term contracts. We moved towards full truckload, which is a big market in Brazil. We did one acquisition to enter there, as I mentioned. Then we entered to parcels. We call it less than truckload, but then let's say it's something close to 100 kilograms per delivery. It's a B2B delivery. But with that, we form a network of branches in Brazil. After that, we bought one company that was stronger in the south of Brazil, but then it's e-commerce, I mean, delivery of small packages, the ones that you receive at home, okay? And we are using the branches we already have to expand this e-commerce effort, not only organically, but also there is another acquisition that we're doing. I mean, it's in the making that will continue to grow that part closer to the end customer. I would say that there is a lot of synergy among them. People say, oh, one has nothing to do with others. In fact, there are different assets, different strategies, but there is branches. I mean, the network is the same. There are a lot of synergies, not to mention cross-selling synergies. So it is a very ambitious plan, and we tend to grow more to the e-commerce and parcel side. And that has grown a lot after the pandemic. So I would say that we were already going in that direction. We simply accelerated. You're on mute, Robert.
Back online. Okay, thank you for that answer. Now we go to the quick speed round question for you, Alberto. Cara or coroa, heads or tails? State it. Which one?
Is it?
Yeah, okay. Cara or coroa, heads or tails?
Heads.
Okay. Okay, you've got it. So you get, this is your question for the final wrap up. You got a couple minutes on this because I have to take it according to risk to see who gets which between you and Sebastian. In fact, it's really just an extension of what you're already talking about. Give us, in your opinion, in Strauss' opinion, from your own investment strategy, a couple of sectors, or it can be themes within sectors that you believe, besides the one that you chose for this presentation, obviously logistics, that you believe will provide not only strong returns, but also quality deal flow going forward for Stratus. And also, name us one that you more or less prefer to ignore or to sideline, thinking that that's going to underperform. So 2 + 1.
Okay, I would say that 2 sectors, and sorry if I'm a little obvious, well, the healthcare sector is something we're looking into very carefully.
Okay, how about a sub-theme or within the sector? Give us a little bit of color on that.
I would say that I would say the sector that includes personal care, I mean, dermatology, ophthalmics as well. This is not personal care, but I mean, this is the types of things we would do.
Okay, good. That's one.
When I say commerce, that might seem a little bit too broad, but about the digital transformation is going to the traditional retail and commerce and helping it to do this leap into digital. We have done that in a drugstore chain, but there is a lot of other specialized retail sectors in which we could do that. Where not to go, I would say that anything that has to do with trends that are going down, for instance, of course, we never really look into auto parts and manufacturing, but unfortunately, I think this is becoming something which is more and more concentrated. It was already something which was not very attractive, but now it's time more, I mean, it's time people want to have services rather than buying things. So anything that has to do with you buying something which is a very long-term durable product, we wouldn't go for it. Of course, there's things that we wouldn't do, infrastructure, real estate, mining, commodities, but that was already before.
That makes sense, yeah. Okay, excellent. Alberto, great summary and a difficult question, well handled. Thank you for that. Now we're going on to our second case, second sector, and within that sector, the case is going to be presented by Aqua Capital and Sebastian Popek. Sebastian, you put yourself online and key up your presentation. I think you're almost ready to go. I can see you. Just pop it up. And there we go, ready to go, all with you.
Great, thank you, Robert, and great hearing you present there, Alberto, and thanks ABVCAP for this opportunity to talk to investors. It's talk because we can't see you and we can't listen to you, but at least, one way I think hopefully works. And I'm happy to take any questions thereafter in writing. Perhaps it's a better format here, but also orally if we have time. I wanted to share with you the case of Biotrop because it's a fascinating new world. I think with COVID, we've read more about biology in the last year and a half than we've probably, most of us at least, read in our entire lives. And I wanted to tell you how this is impacting the ag world, has been, and is really transforming it. Aqua, some of you, hopefully, we have 2 commingled funds since inception. We've done 35 acquisitions within 12 platforms, 10 of which we still have and 2 which have been exited. We're a pretty large team focused exclusively on the ag and food world, the ecosystem, which is pretty broad. And we've rolled up several companies that have almost $2 billion in revenues. And this is creating today a really interesting franchise value where we are able to attract more companies that can really benefit from plugging themselves into our ecosystem. We've been working a lot with ESG, like Alberto highlighted. We've won a number of awards from LAVCA. And we also take organizational culture very seriously. We think in growth, Alberto mentioned this, I want to highlight it. Growth is key to have healthy organizations. We grow organically 24% year on year across platforms, plus another 15-ish with acquisitions. And you can't do that if you don't have thriving teams really aligned. Well, ag and food is changing. And, the first point that I'm making here is, people need to eat and there's more people. This has been, this is Malthusian. So this has been going on for a few centuries, but highlighted about 15 years ago as emerging economies developed and you have more population, but really more changing diets, when you go from vegetable proteins to animal proteins, and then perhaps we may go back to vegetable proteins, you need more and better food. But what we see at Aqua is that there's 3 trends that were underlying this and transforming the world, but they accelerated. So the first is tech has come of age in ag and food. It took a long time. It's one of the sectors that was longest in disrupting, but it's here. And this is just the tip of the iceberg. And you see these billion-dollar companies going public. This is just the, 0.1% of what's really happening in our sectors. The second is COVID accelerates people wanting to eat better and to get their health and wellness through their food. So it's not only how we receive our food, say through food delivery systems and so forth, it's what we eat. And the final thing is we've seen, fortunately, an acceleration of the climate change sustainability agenda. It seemed like a, kind of a conscious thing a year or so ago, and it's become a tsunami. I think it's a tidal wave of change. And ag is the world's largest utilizer of resources and the second largest emitter. So we have a lot of work to do here. And this creates a huge amount of opportunities. Now, going on to what's funner, Biotrop is a company in the biological space. So we sell products that will replace chemicals, that will increase soil fertility, that will help plants absorb nutrients, and that will substitute crop chemicals. Now, this is really good stuff. So instead of using synthetic chemistry, use our natural chemistry, use biology, and obviously the operating principle is different, but you're getting rid of the bug, you're getting rid of the fungi, you're getting rid of the pest. And this is good, and this is completely environmentally friendly. And I think what's interesting is it not only drives productivity gains, but it has really high margins. So this is not something that is a futuristic business or one that depends on subsidies or anything. This is something that in certain categories, definitely not throughout the spectrum, is beating crop chemicals and so forth. And the industry itself is growing 22, 24% a year. So this is really good when you get yourself in an industry doing that, and then hopefully you can outperform that growth. This is all organically by really driving, a better go-to-market, a better product portfolio, a better marketing strategy, and so forth. Margins have become, a little bit better. I'll share why. And what we do typically is you load up an organization with SG&A. You got to bring in the governance, you got to bring in the sales, the marketing, the go-to-market, you got to do technical sales development. Farming, if you miss a window, you lost 6 months at least, if not a year. So you got to do market development. But fortunately, we've been able to scale up. This is atypical. You get out of the J-curve phase in the first year. Now, what's what's the inner engineering here? 4 things I want to highlight for you. The first is portfolio strategy. We had a cash cow. We have a cash cow business called inoculants. These are biologicals that help essentially plants absorb more nitrogen from the soil. This was a cash cow. It is a cash cow. What we bet on is a host of new R&D technology that was in the pipeline, really not much there. And we accelerated that and point number 2 is tripling R&D investment. Now, it may not sound like a lot, but I think that, you know, this is pretty transformational. In South America, we don't have generally this R&D driven that we can really have technology. But guess what? In this area, we're really world leaders in the use of biology for this. So you can see the share of sales coming from high value added products. This is driving margin gain. This is driving uniqueness. And this creates a real big moat in the capacity competitors may have to copy us. We spent a lot of money on an experimental center. You want to test your technologies over and over, permutations, alternatives. You want to provide recipes so farmers know exactly what to use. IP protection is really big. The beauty of biologicals, it takes only 2.5 to 3 years to register. Crop chemicals take twice as much, at least in Brazil. And once you have the bioregistry, this is a very strong claim that allows you much better marketing, access, and communication with clients. And then there's the international sales expansion. It's a bit timid today, but this is the early stage. It's a profitable growth. We're already in Peru, we're in Ecuador, we're in Colombia. Colombia is much more difficult to register. It takes a longer time. And a really, really big bet here is we want to be very relevant and big in the US. We've tested the technologies that American companies have, and ours leave nothing behind. In fact, the contrary. The real challenge here, though, is A, conviction, and B, market access. This is the vision. You know, you take a team that, I don't want to diminish it, but has, you know, very good attributes, but is really not top level. You make it world class. And this is, you know, the CEO used to run FMC Latin America, $1.5 billion business, but he's a researcher. He gets technology and a very enthusiastic leader. You go from artisanal processes that are very manual to efficient, top quality, biosafe, and scalable. For instance, inoculants, we still make a lot of money, but we got to quadruple the scale to really get our unit costs down and be competitive there. R&D, it was really serendipity before, and it got the company pretty far. Now you need to systematize it. You need to increase the depth and breadth of the testing, and you need to prove this in North American and European institutions, which is really what international buyers will ultimately take as proof of concept. Portfolio moving to high value added, value prop. This was huge. We went from 15 salespeople to 68. Of the 15, 4 are left. This is in 3 years. So how do you get organizational engagement? How do you keep the clients happy? How do you, you know, sustain an organizational culture through this amount of transformation? We measure climate, and it has radically improved. Obviously, aligning incentives, and then, you know, getting this geographic coverage, which is pretty challenging. You know, we're big in Brazil, we're small in other places, but I think in hindsight from doing this with a similar company we had in another fund, we took time to go international. And if you take time, the lead time is so long. If you start doing this year 3 or 4, you're not going to get it done. So we're starting early. It takes a lot of time and focus, but we think that a strategic buyer will really value having a patchwork of other countries integrated. Alberto has done deals in other countries. And I think that at the end of the day, our off-takers want a bigger problem solved, a relevant bigger problem solved. And, you know, I think we're doing that with international expansion. So I'll pause here, Robert.
Well, absolutely fascinating stuff, and really very, very interesting case as well, inside a very large and complex sector. I've actually, we've got a few minutes, so I've got a couple of questions for you. Let's, talking at the actual company level, all of a sudden you want to go international. They're starting to push out, and you really see a potential for expansion to the US, which is clearly an enormous monster market. How do you see, now there's a lot of talk about dirty hedging, where you can, look at cash flows on US dollar basis, in particular in commodity markets. there's a lot to be said for the possibility of having forms of being able to hedge typical Brazilian FX risk. And again, I don't know if your company is producing everything here, if you're using a mix of inputs externally or so on. How do you play that as you move forward with the company to take it international in terms of balancing out your treasury risks, shall we say, the nucleus of your cash flow?
Look, I think in 16 years, I've learned you can run, but you can't hide from effects. Okay. So let's put in the elephant in the room. We are long Brazilian reais, and it's been a horrible vintage for the last 7-8 years, period. Now, I think we can outperform because we're buying at completely different multiples and we're growing organically a lot. Having said that, what are the FX management tools you have? One is business model exposure. So our clients make more money with devaluation, we sell more technology. This explains a little bit why we've grown that much. We want to take all the credit, but some of it came because our clients are just making a lot of money and they're saying, what have you got there what have you got out there for me? The second is clearly international expansion, Robert. The third is IP. And I think that, not only are we registering, we're investing, $2-3 million for a company with $10 million EBITDA this year. That's a lot of money in IP protection. And what we're doing is not only registering in Argentina and Peru, and we're registering in France, China, and India, because we will not have go-to-market there, but our strategic buyer definitely has sales force there. And if you shorten their cash flow by 2-3 years, this is dollars, not reais. Will it pay off? I don't know. I hope so.
Good point. Very quick. Okay, I got your final coin flip question to come after this, but just very quickly, 1 minute, cut into the agro sector. It can be agro mixed with food. For your portfolio, Aqua Capital is looking at 1 or 2 areas within agro that you think are going to outperform and are perhaps a little hidden gems. And what would you consider to be an area that perhaps is overdone, a cash cow that's been moving for too long and it's too overdone that you want to see less development from your portfolio?
So, the really exciting, first of all, I got to think about this because you asked Alberto 15 minutes ago. So I'm going to, elaborate quicker on that. The first is the sector that I think is great. And the sector I think you want to avoid are alternative proteins. You want to avoid it because the companies that are branded are seeking multiples based on, we think, a story and a lack of real deep technology that doesn't really create differentiation. So the valuations and the lack of technology create a sense of you're buying really, the future, but without any proprietary IP. Strategics are not, naive. They read the same papers we do. They're investing in their brands and so forth. So I think alternative protein branded is something that we avoid.
Give us one area that you're looking at for your pipeline that you think is going to be positive from agro.
Well, in the search for gold, you try to sell picks and shovels to people who are producing alternative proteins.
Yeah,
they will grow a lot. So perhaps a way to play this is somewhere else in the value chain.
That's perfect. Okay, final question, and this is off the coin flip. And also was posted to Gabriel from Vinci. So he came up with a good answer for this. So I'll be curious to see if you can attack it in the same way. So after dozens, if not hundreds of LP meetings over the past few years, what theme or diligence area do you really believe that investors tend to over-exaggerate in when they're looking at Brazilian or even regional risk-reward analysis? What do you think that people are overstating a little bit too much and should perhaps, let that go by when they're looking at Brazil risk reward?
Look, I think that FX is a huge thing. And look, we've been burned. And so, I don't think anybody is short-sighted by bringing that up. But you got to be thinking with a 10-year horizon. So with the real now at 5, is Brazil expensive? Is it cheap? I think you've got a lot more upside than downside today. Now, could it go to 7? It could. I could be looking very foolish a year from now. But when you look at the cost of living, when you look at PPP, Brazil doesn't seem to have a lot of downside. And if anything, close to the medium or actually upside. So I think for investors thinking about 10 years, looking with a rear view mirror is not necessarily, I think, what's going to serve you best. But I understand that people have been burned and there's a clear concern there. So it's rather, easier to skip a good party than to get stuck in a bad one again. But I think that the next 10 years are really exciting for us. And I think there's a lot of growth that's transforming economy. So for PE, VC focused on growth and tapping that systematically, we can get 40% IRRs. We're buying at 6.5 times and there's very little competition. And I think it's one of the best real estates in the world, if you think about it that way, that's really, really not arbitraged up the way the rest of the world has. At the end of the day, we still make a lot of money when we buy well.
Fantastic. Great summary, Sebastian. Tough question. And again, thank you to Sebastian Popak and also Alberto Camões for your excellent retrieval of some essential knowledge on two very important and interesting sectors going forward for deal flow. So now we're going to pop off into our final segment, and none better than João Buzin to give us an overview of what's been going on at the legal and regulatory end of the stick. And one that is quite simply can be the tail that wags the dog when it comes to returns and when it comes to getting joy out of Brazilian private equity for investors and LP investors. So, Jerome, considering that we have effectively, I'd say somewhere between 65 to 70% of the more important active DFIs and investors over the past 2 years are on this call, and we'll be accessing this video and we'll be looking into your words of wisdom. We definitely want to hear about changes in the ecosystem, anything that's come up on your radar over the past year and a half during COVID and even beforehand. We talk about changes to the economic law, changes to some other economic data, which is more what Vinci was talking about. But give us your feedback from what you're seeing and also from your thoughts on changes to the ecosystem that are going to be positive, or if you see any difficulties on the horizon that should be dealt with that perhaps even us at ABVCAP can be using as a lobbying force.
Robert, thank you very much for having me. Pretty honored to be here today, as usual. And obviously, I won't be talking about the FX issue that burns.
Unless there's a new law or some new taxes that will be making that more inefficient or will make hedging difficult or even more so than it is. That's always relevant as well. But we're looking behind the curtain. We want to see what's behind the curtain, Jerome.
Yeah, just joking because of on the back of the previous session. It's always a difficult issue to deal with the FX. But today I'm going to be talking about another very important area where most of the international LPs focus on when investing in Brazil, that taps upon liability exposure. Because, as you know, and normally all these investors, especially the DFIs of the world, they're very cautious about any potential contamination of their other strategies and liability, personal liability risks as well. And as you know, we have, and I'll just share my screen here. Robert, I put together a few slides to talk a little bit about the latest developments in this regard, because I think that there's actually good news for the ecosystem as a whole, because a couple of years ago, we had this new law, the Brazilian economic freedom law, that brought some more clarity on liability issues, especially for the fund industry. And I'll just bear with me a second. Hang on.
That point you mentioned was one that was brought up by Gabriel and also by João Carlos a little bit earlier on as well about the economic law.
Yeah, it's a very, very important innovation in our system. Ciao. Sorry about that. It's a very important innovation in our system, because it's probably the only and only law that brought clear limitation on liabilities for members of regulated fund types, and this is very useful against the background of a segregation of liability when it comes to the companies these funds invest in, because in the past, what we had was a framework where we have, and still valid, where we have segregation of liability when we're looking at the invested companies. There's segregation of liability between the company and its shareholders, except for a few provisions pursuant to the Brazilian law, some of them a little bit more aggressive than others. We have the mechanism of piercing the corporate veil that is brought by the Brazilian Civil Code in respect of general obligations from a civil perspective. There's the Brazilian employment law, and this is probably the chief danger zone when we look at the liability framework applicable to Brazilian companies, because there's been some abuse in this regard because of the concept of economic group brought by the Brazilian employment law. So essentially, the shareholders of a certain company may be on the hook for obligations of the underlying asset as a consequence of law. You don't even need to actually disregard the corporate veil in order to reach the assets belonging to the shareholders. We have the Brazilian Consumers Code. We had a very iconic case in Brazil with the Carlyle Group. Fortunately, this is been put to bed as a consequence of an investment made by the GP itself, and also there's clear definition of liability of the company itself. So this is probably a non-issue in a few years. There's the Environmental Crimes Act, which is one of the few possibilities of holding a company liable for crimes. So and if there's any abuse of form by any of the shareholders, the corporate veil may well be disregarded as well. And there are a few possibilities as well pursuant to the Brazilian tax code. However, what we had before, even with this segregation of liability, whenever we had a case of piercing the corporate veil, if the company was invested by a fund, it demanded some structuring. This is because the funds in Brazil, the sort of FIPs, the FIPs are very popular as an investment vehicle in Brazil. They're considered as a pool of assets, a condominium. So there's no separation of liability between its members and the FIP itself. Shareholders, in general, they have unlimited liability, as well as the administrator and the general partner. So it demanded structuring in order to insulate liability with, for instance, a Delaware entity across the chain in order to generate what we call the conflict of jurisdiction. And just as an example, I'll put this is how a typical cross-border structure looked like, and where I thought that in red here in the deck is where we sort of raise the conflict of jurisdiction, because it's very difficult to pierce the corporate veil of a Delaware entity. So the liability would stop at the level of the Delaware entity. Against this background, I think that this was one of the biggest challenges of our industry. And against this background, we had this innovation brought by the Economic Freedom Law that was passed in 2019. And it brought a definition of the funds as a special nature condominium. So with the possibility of affording limitation liability by each of the members, as well as the GPs and administrators. So and also brought the possibility of funds to issue separate classes of shares. Even, we still have to regulate this at the level of the CVM. So we need to adjust all the framework, the regulatory framework applicable to funds in order to provide for the principles brought by the Economic Freedom Law. Although many of the fund managers, they've been including in their bylaws that there's limitation on liability, and also setting out contractually what would be the limitations on liability of GPs as well as administrators and their role in respect of the investments made by the fund, as well as their role in managing the fund. And here is, we had in the end of last year, the CVM started a public hearing. It's public hearing number 820. Which is intended to adjust the provisions of Instruction 555, which is the, I would say the main regulation applicable to the funds framework in Brazil. Obviously, we're going to have sort of spin-offs as a consequence of that. So this is going to be brought to the regulations applicable to the FIPS, to the securities, to the credit funds, the FIDICs, as well as the real estate funds, the FII. So we had this group at the ABVCAP to discuss this, and we provided our contribution to the public hearing process. I think it was the end of last month, if I'm not mistaken, Robert. It's just slipped out of my mind. But we made a few contributions, and the main goal is to have clear separation between the liability of members, shareholders, and the fund itself, as well as the clear definition of the role taken up by the GP as well as the administrator, as we have this figure in Brazil. So the idea is, at least from a ABVCAP perspective, is to give GPs a more active role in respect of the fund and the portfolio itself, and the administrator being responsible for the substantive part of the work at the level of the fund, such as housekeeping, bookkeeping, and so on. And there, as expected, considering that we're applying now a segregation of liability between the fund and its stakeholders, it's important that we provide for certain rules about insolvency and how to recover a fund, which is the same as the bankruptcy law we have in Brazil or the recovery law we have in Brazil. So we have to do something along the same lines in respect of the funds, considering now that we have the segregation of liability. So this is already contemplated in our contribution. This came in the resolution that is being put forward for amending instruction 555, but we provided some more level of detail, and also how classes of shares would operate vis-a-vis the assets invested by the fund. So in a nutshell, Robert, this is what I had for today. Happy to take any questions.
Yeah, do you see this this going forward, in particular, this final addendum and putting through instruction 555, do you see this changing structures of funds, structures of GPs, structures of way that the relationship between the GP and administrator is being set up? This would obviously be focused on the local FIP structure here, as opposed to your international structure that you're putting forward to channel dollars into the Brazilian economy. But that being said, do you see that this particular evolution doing exactly what in terms of structures locally? Will we have eventually a new form of FIP, or no, this will be within the bylaws of the FIP, the level of granularity of this will go down within the fund itself?
Yeah, I think so, because it will give more flexibility on structuring in Brazil from an onshore perspective. I think it provides more visibility on the terms and conditions for investors, which is always a very important, plays a very important role in the decision-making process and where the governance of a cross-border structure would sit. And I think that this is the intention here is to have the FIPs and other fund types, regulated fund types, as a sort of a hub out of the Brazilian market to the rest of the region, at least, not to say globally, because this is a way to sort of have investors, I would say, more comfortable in concentrating their governance in Brazil instead of having expensive cross-border structures with many vehicles across the chain and
right.
separate types of consequences and a complex waterfall. So the intention is to simplify as much as possible when it comes to investing in Brazilian assets. So the intention is to definitely change the terms and conditions in the relationship amongst the stakeholders in our ecosystem.
And this brings us closer to which of the models would you say more closer to the US model of private equity?
Yeah, I would say so, Robert, because it was substantially inspired in the model that we have in US, with less flexibility because we're talking about a very contractual culture in the US, because we're talking about common law vis-a-vis civil law. So it means that everything is codified here in Brazil. So, but the intention, the regulations and this economic freedom law is taken as benchmark the practice that we have in US in terms of this is why, because it's a very liberal model. Even the name of the law itself it speaks for itself. It's economic freedom law, so there's a very liberal approach with all the limitations of a civil law country.
Do you see any other legislation on the horizon? And I'm not even going to go into tax and tax policy and the potentiality of tax reform, which is quite large here in Brazil as well. We could see some activity on that certainly in this next fund cycle. But just focusing on legislation and on the regulatory side, do you see any other initiatives beyond obviously CVM 555, but like this that is starting to be drafted that could have some positive impact on the industry going forward as well? Things that you've been seeing in perhaps on the back burner that might be brought forward and lobbied into by ABVCAP and by the industry?
It's an interesting question, Robert. We had recently the regulatory framework for startups being approved by the Congress. It was a very interesting effort because it brings some more clarity to the smaller caps, I'll put it this way. And it's certainly related somehow to the economic freedom law. So the economic freedom law itself unlocked several areas of law. And I think that there's going to be some review on the notion of an economic group at the employment law level. There's been some discussion around changing tax laws and how this would affect the tax reform that is coming up, that is under discussion at the Congress. So one of the issues that is going to be factored into this discussion is definitely the economic freedom law and how this steps upon the changes that are coming up. So obviously there are many sectors of the economy. It's very difficult to pinpoint each and every point that is going to change, but definitely this will influence everything we know in our legal framework, and for the best, I think, because for the better, because it tends to align our system to developed economies such as the US or the UK.
Getting rid of the Jabuticabas and staying up with
exactly
with the Joneses, But and we certainly have to do this to keep up with the global industry. But that's positive news. The regulatory side is already, and the regulatory framework in Brazil is already one of the leading lights of this particular ecosystem. And as you look at any of the rankings of ecosystems for private equity outside of the US and Europe, and Brazil is always highly ranked amongst them in terms of ease of doing business within private equity fund management. And so I think any steps that can improve that, whether it being the economic law or other formats that will improve visibility of the corporate veil, is obviously going to be a positive for that. Joel, many thanks for you coming in and giving us a very brief but very in-depth overview of what's coming on in terms of the regulatory side. And I think, again, your contact is there. We have a number of very influential and also very active LPs who are interested in trying to track this and keep in touch with anything that might change the necessity for the way they structure their portfolios and their structures for investing in private equity. So again, thank you very much for that. And that wraps us up. This has been 3 hours of very intense LP-focused, investor-focused information, a mid-year update on the Brazilian private equity industry, and I hope you've enjoyed it. Thank you to all our speakers for a tremendous amount of really great content. Very happy to have been sharing this. It's been really it's gone by in literally a matter of minutes. I want to say thank you again to our hosts, Apex Brazil from ABVCAP, and also the Convenio program, which has been a major supporter of the Brazilian private equity venture capital ecosystem for the past 10 years. And I think we're going to be seeing more events as the market starts to open up, perhaps towards the end of this year. For the moment, we're quite happy to be working on webinars and keeping in touch with you with good data going forward. Please, by all means, do give us some feedback on the event if you can, so we can have your points of view on what we could do better and what you'd like to see in terms of information. Your feedback is essential to positive process of keeping the information flow and the data flow coming from GPs to LPs within the ecosystem. And again, thank you very much for your time. We will be providing the information in the video stream through the inEvent platform for another couple of days. And after that, we'll be posting you with direct link to our YouTube channel, which has got all of this plus plenty of other interesting LP-focused investor information on the ABVCAP YouTube site, as well as the ABVCAP website. Once again, thank you all very much. Have a great afternoon.